investors here in India is that you must buy every dip, and they've been following that to the T, right? It's a one-way market. Every dip is bought in. Investors only know that they need to pump in money whenever the market falls, which is fine. No one seems to be talking about profit-taking. No one seems to be talking about the other end of the spectrum. Your thoughts here, given the elevated levels of the market, the fantastic rally that we've had, is profit booking advised in any parts of the market?
So we have been taking this view that since a fairly long period of time, while we did in the last conversation mentioned that we've taken some heart in the earnings delivery up until now, and generally corporate earnings in India still being reasonably stable. But obviously we are expecting a fair bit of volatility in the second half, driven by many events. Some of these events which have happened in the last few days are not necessarily what we entirely anticipated, but we were expecting that there would be possibility of volatility coming through in the second half of the year, and that may crimp returns compared to what we have been used to in the past. So yes, you're right that we do not necessarily expect the second half to be as smooth as what the market behavior has been, especially in India in the last 6 to 9 months' time. And I think some of the other events are yet pending, whether it be in the form of outcome of US elections, as well as in terms of the direction of interest rates. But I think there are, from the events of what has happened in the last some days, there's some positives as well. So we like as I said, that we do now see a possibility of interest rates both in the US as well as following through in India, cut in interest rates coming through. And the second being that fortunately, despite the fact that there is a war-like background once again in the Middle East, we've seen commodity prices, particularly oil, behave reasonably well, in fact favorably. So again, a departure from what we typically see when there is geopolitical risks. But this is something which probably will come to India's defense. But in the meanwhile, yes, we'll see volatility. We'll probably see churn in the market. We'll see rotation as well for whatever duration of time, from, let's say, certain aggressives to certain defensives. So all that is what we probably expect and to unfold in the next up until the end of this calendar year. And to some extent, we've tried to prepare ourselves in terms of our portfolio positionings to defend ourselves.
You mentioned rate cuts. Just to complete that point, in the US and in India, you're expecting, how much of a rate cut in India in this calendar year?
So, well, we've not put a number to it, but essentially I wouldn't be surprised that we start off with at least a 20, 25 basis points, and probably in the next 6 months' time, we get to a 50 odd basis points if, the US particularly commences on its rate cycle.
Hi, Tahir. Good morning. So it appears the risks are global in nature. US recession, the reversal of the yen carry trade, as well as geopolitical issues, they're back on the table. And given that sort of environment, which is the place to hide here in the Indian markets? The FMCG stocks, for the time being at least, they're doing relatively better. The Nifty is down 500 points. You have green on HUL, Britannia, Marico, they're doing pretty well. What's your view on the FMCG pack?
So once again, Nigel, we spoke about that as well some conversations ago, and exactly that there will be some of these sectors which will probably make a comeback for one reason or the other, and there is a confluence of factors which have started to fall in line, stars aligning, so to speak. One is that we've got a good monsoon. We've already had a fair bit of deep cyclicality as far as the sector is concerned. Many parts of the FMCG stroke, consumer durables stroke, value retail, if I were to call it, or consumption at the lower end of the market in general. Those are parts which have actually lagged the overall market in the last almost 24 odd months. So clearly a catch up. There are certain factors, interest rates coming along the way. That has also been a factor which affects these pockets of the market a little more than what it does to the others. So the reversal of interest rates probably should also kind of act as a support. So I think. And last but not the least, I think obviously the market is not significantly exposed out there in terms of ownership levels, at least incremental ownership in the recent past. So I think these all should drive up valuations out there. Certain expectations will develop out there. Maybe they will overshoot as well in the short run. So that's kind of likely. And that's like where I said that, sector rotation away from certain risk assets, away from probably parts of value to growth parts of the market is quite likely.
Just coming back to you, Tahir, I want to highlight a few more names as we are moving on, as we're seeing. Just a few sort of stocks, really. You've got Senco, will come up on your screen. That's up 1%. There is, of course, all these FMCG stocks are higher. Marico, HUL, Sun Pharma is high. UPL still trades in the green. There is Lux Industries out of the blue. I mean, coming up as one of the top traded names, but it's up 1.5% at this point in time. Kernex is flattish. Samhi is up about 1.3%. So it's a mix, but yeah, market breadth is of course overwhelmingly lower at this point in time. I think some 20 stocks lower as compared to 20 to 1 in favor of declines at this point in time. Lots of 5-6% cuts. The railway stocks are all down. Mazgaon is down 6% or so. There is NBCC, which is down 7%. IFCI, Ircon, Railtel. These are all names which are down between 5, 6, 7%. And of course, so much more. So 500 points down now. We're at about 24,200. Now 24,200 is to my mind a decent kind of support level. Market spent a fair bit of time around these levels. So let's see if we are able to hold this. Otherwise, you're essentially then looking at the lows of the day in the budget, which is about 24,074 or so, 24,100 roughly. But we'll see if the 24,200 comes into play, and then by close we are able to hold on to it or not. Tahir, what else would you do at this point in time, and what would you ask your team to focus on at this stage?
So, we've not really changed any major tack in terms of our approach to the markets. We continue to ideate. We continue to look at various parts of the market. In some of the value parts which have done exceedingly well as well. Some of these corrections are welcome. Probably they will give us some better entry points. Look, like as I said, I mean, we do expect that the markets will moderate. There will be certain return expectations that we need to recalibrate. We need to be somewhat more conscious about risk over return. All that said, I mean, we don't expect very deep corrections or deep cuts in the market, because we generally believe that when we look at the overall economic scenario and the health, it's not something which is very daunting. There will be some of these global circumstances which will create disturbances once in a while. But I think if we are not expecting deep corrections in the first place. So if we get something which is of that 5-7% variety, which is what it should turn out to be in my view, I think in that process, if we get certain interesting opportunities across a swath of sectors, we are prepared for it. But in the meanwhile, need to be more balanced in terms of the overall portfolio configuration, at least to make sure that we don't get we prepare for risks more than return. And I think to that extent, rebalancing the portfolio has been undertaken in the recent past. We'll try and continue to explore those possibilities, whether it be sectors like FMCG or consumption, lower end consumption, maybe IT also to some extent. Perhaps banks, they too might become interesting at some stage. So I think this is how we will probably approach it. Bottom line is basically just try and keep as much diversity as possible. Positive framework, but use corrections as opportunities to buy what you would have loved to buy at better price points.
Okay. All right. Tahir, thank you very much for all the perspective. Much appreciated. You have a good day, and we look forward to the next call. All right. The market is still nursing those losses, 470 down. So as of now, that dip isn't getting bought into. Let's see how this plays out. About 2% decline. But compared to the rest of the Asian screens, this is probably not too bad. Let's move on then and focus on Narayana Health. The company's revenue and margins came in line with street estimates for the first quarter. The margin is above 20% for 8 consecutive quarters now. To talk about the performance and the way forward, we have Sandhya J, Group CFO of Narayana Health. Sandhya, thanks so much for joining in. I'm just looking at the numbers, as we kickstart the conversation. And it's been a pretty good quarter, because I think your revenue, both for inpatient and outpatient, it's shown a decent improvement. Can you just tell us what the occupancies are like? Though I know you always make that point that now, people have to spend lesser time in the hospital because of the advancement in technology. But just to get an idea of, average occupancies and the average revenue per patient.
Sure. Good morning. Thank you for having me here. So from a Q1 point of view, I think both from a revenue point of view and from a margin point of view, we've seen, I think, a good expansion. From average revenue per patient, that's measured in IP and OP. So our IP ARPP is about 1.29 lakh. That for the same quarter last year was 1.18. So there is an expansion there. And OP ARPP, which was about 4,089, is now 4,400 odd. So there is expansion on both of them. As far as occupancy is concerned, like we've always said, it's not a very accurate measure. We always aspire to be on an occupancy range of between 60 to 65%, which is the midnight occupancy, which then is a much higher occupancy in the daytime because of the daycare, which you explained. So this being a little bit of a weaker quarter for healthcare, we've come more on the lower end of that range for this quarter.
So that would be closer to 50% occupancy?
60 to 65 I mentioned, so we'll be in the 60% range.
Okay. And what about, the trend from here on? And if you could also give us some sense on the more evolved, the higher level surgeries, what has been the pickup on that side of the business?
Yeah, so this in Q1, we've seen a lot of high-end procedures coming through, both because of the awareness which is being created in terms of high-end procedures, but also in terms of the convenience of patients. What we've consciously done is made significant investments in the current year in terms of our own robotic program. So therefore, we have robots coming up across our hospitals on top of what we already have. In addition, we've also continued to strengthen our transplant programs as well as our orthopedics programs. So therefore, we will continue to see an upward trajectory on all the high-end work that we are currently doing.
All right. Hi, Sandhya. Good morning and good to see you. Just to understand, as a percentage of the total mix, what is it at high-end surgeries as a percentage of your mix? If you could give us that number, what was it? What is it? Where do you see it headed?
Sure. I'm not sure if you've put that number out there because there is no clear industry definition on high-end surgery. But what we will do is probably work on this a bit and then come back with a little more industry-aligned approach, because we may have an internal measure, but we would want to share something that's more comparable with the industry. So maybe, when we speak next time, we'll come with a better measure on high-end surgeries. I think it's a good call out to have.
I got that. Sandhya, hi, good morning. Prashant here. Could you give us a quick sense of the sort of capacity expansion plans afoot at the company, and how many beds by the end of the year, and just give us an overall sense.
Sure. So as you're aware, we've been on a little bit of an intense capex drive over the past few years. We've done 1,000 crores each of capex the past 2 years, but a big chunk of that was in Cayman. Now, Cayman expansion is completely done, so all the money is pivoting into India. This year, we've guided between 1,600, 1,700 crores of capex, and I think we will be in a similar range for the next few years. Having said that, we will not be creating any significant bed addition in the next 2 to 3 years till our capacities come up, because all our projects are greenfield at the moment. We are building capacity because we believe that is the most effective way of return on capital in this, because it's a very asset-heavy industry. So therefore, you will see a lot of capex intensity over the next few years. But the inflection point or the return on those capex intensity, either in terms of number of beds or in terms of revenue growth, will come a few years down the line.
Sandhya, will that capex intensity be all organic ground-up growth? Or are you looking at inorganic assets as well? Because there's a lot of consolidation going on in the industry. There's so much chatter around, for instance, Aster DM, etc. So just want to get your thoughts on it.
Largely, we are looking at organic growth. We look at inorganic opportunistically, but because ours is a model where we want to be cost effective to our patients as well, therefore, we are not going after assets which are very high price. So therefore, we will be finding that balance. If we find the right cultural fit, right price fit, we will be interested in those assets. But the way we've looked at this market so far, I think we've been more indexing on own build. That seems to be fitting into our parameters better.
Can you just give a geographic breakup in terms of the rollout as the capex comes on stream and more beds get added? Will it be sort of more skewed towards the west, south, north? I mean, just some idea of geographically where Narayana will be, say, a year down the line when this capex comes on stream.
So the capex will come on stream over a few years because building a hospital takes 2 to 4 years, depending on the size of the hospital you are building. But in terms of priority, it is Bangalore and Kolkata. So a large part of our capex will go into Bangalore and Kolkata. We are keeping aside some amount of capex for our other regions where we already have presence. But those we are taking up after we've exhausted the opportunity set here in our core market, which is where our ROCE is highest and also our return in terms of revenue and margin performance is healthy. So we are allocating more capital into the healthier part of the business to start with.
All right, Sanjay, we'll leave it there. Thank you very much for your time. Appreciate you sort of coming on and providing that outlook for us. Well, let's bring in our next management. Titan is with us. The management is with us. First quarter was a bit muted. EBITDA profit met street estimates. Gross and EBITDA margins were stable as well, though. We have Ashok Sonthalia, CFO at Titan, now joining in to talk more about the first quarter performance. Mr. Sonthalia, good morning. Great to have you with us here as always. Prashant this side. I guess what the market wants to know is the outlook for the remainder of FY25 for the jewelry business. Could you tell us how has the second quarter panned out so far?
So, in fact, the July month had a major event in between in terms of union budget, reducing custom duty in a large this thing. So pre that, market was okay, slightly better than I would say quarter one. But post custom duty reduction, we see a lot of traction coming in for particularly gold jewelry. And a lot of customers are coming in if they were on the fence to make their purchases. That gives us the encouraging sign for the remainder of the quarter two, and quarter three being a festive quarter always. We are very, very positive about that.
Could you tell us, post that sort of customs duty change, what has been the is there a noticeable bump up in sales?
In the gold jewelry purchase, I can say, yeah, it is a noticeable.
I mean, would you be able to broadly, ballpark quantify it?
So if the quarter one growth numbers were 9% above, definitely we are seeing healthy double-digit growth post budget.
And sir, is this only restricted to jewelry, or are you seeing sale of coins as well? Because that duty, the capital gains tax cut, that's the other bonanza, right? Coming down to 12.5%. So just wondering if there's more investor appetite that's already visible?
So custom duty has a direct impact on jewelry business, particularly gold jewelry business. And we have talked about that. This is very, very positive move by the government, which will help jewelry industry to be more organized and and it will improve competitiveness of Titan brands particularly. So we are very, very positive. As far as LTCG is concerned, I don't think there is a very, very direct implication for jewelry industry that way.
Okay, all right. Hi, Mr. Sonthalia. Good morning and good to see you, Ben. Well, what about the inventory loss? It's going to be a positive for sales, but there would be some inventory hit that we should be looking forward to as well?
So we talked about, Nigel, that we had certain inventory, which was custom duty paid. And that will flow through our P&L for the next 6 months as that inventory gets sold in the market. And that estimate, one-time loss estimate, is ranging from 500 to 550 crore.
So that will be in the next 2 quarters, quarter 2 and quarter 3 we'll see that impact, right?
Yes.
Got that. Also, we'll get back to the numbers, but there have been large conglomerates that have entered the space and it could get a little bit competitive. How do you read this? Birlas and Reliance are, making their presence felt out there. The market's big enough for all to exist, or do you expect the competitive intensity to hurt?
So competitive intensity in organized players is definitely going up, Nigel. But overall market is very large, and the secular trend of organized sector gaining over unorganized is intact. So I'm sure there is a space for more organized players or organized players expanding. yeah, temporary. There will be cycles of intense competitiveness and then, settling down. Perhaps we are going through right now that. And but we are okay as long as market is getting organized. People are looking for brands which they trust and which they like. It's okay.
Sir, let's talk about the jewelry business in particular and some more trends here, because I believe the share of studded did not really go up much in the quarter gone by. What is the trend? I mean, is this a one-off? What do you forecast for the rest of the year as we get into festive? And also for the jewelry business margin, where you've been talking about maintaining those margins above, I think, 11.5%. Now with this new pricing dynamic coming in with the duty cut, etc., what's your expectation and guidance for the jewelry business EBIT margin?
So as far as margin is concerned, our quarter one delivery of EBIT and EBITDA margin has been in line with the previous quarter one, and we don't expect anything significant changing as far as remaining 3 quarters are concerned. You are right that while studded overall in absolute amount is growing, but the growth rate is slightly below gold jewelry rate. Gold at this point of time, from the investment angle point of view, perhaps is slightly more appealing to the consumers, and high value diamond and solitaires are slightly at a slower move, which of course affects our margin profile overall for the jewelry business. But we are able to maintain by working on various cost levers, various margin improvement program. So we think that margin for the remaining of year would be around the same line, while competitive intensity is there. But I don't think we are looking at price cuts or squeezing margin to kind of defend our market share or grow our market share.
So can you give us the band again, sir? When you say they'll stay around the same lines and level, you're at about, I think, 11.2% in quarter one. Right. So
overall 12%, as we have talked about in last annual investor day also, that domestic jewelry should be anchored around 12%, could be plus minus a little bit here and there, but that's our target to be achieved by us. Yeah.
Okay, and Mr. Sandalia, this includes, coming back to all that talk about competition, higher sort of spending, marketing spending, etc. I mean, you're accounting for all of that. Will we see that, by the way, higher spends?
Not very significant, but wherever the jewelry industry is very, very regional and catchment based. So wherever we find that, and we keep mapping our competition from city to city and catchment to catchment. So of course, something more to be done on the marketing, and which we will not shy away. But that should not be so significant that we need to tell about margin impact.
And, I've asked you this before on lab-grown diamonds, that still remains very insignificant? I mean, in terms of...
Yes, compared to the US market, what we saw, markets are very different. In India, still it is a slow start, I would say. And that might have created, of course, some noise. And that is where you see high value studded and maybe solitaire slightly slower than rest of the portfolio. We will wait and watch how maybe lab-grown diamonds are recruiting new customers in India, and they are likely to do that compared to US, where the diamonds was already very, very penetrated category. So we will wait and watch. We are kind of keeping our eyes wide open on this development, but so far it is still not affecting customer sentiment so much.
All right, Mr. Sundaria, we'll leave it there. Thank you very much for your time. Great speaking with you. It's always a pleasure having you with us. That's the management of Titan. Stock's down about 1.5%. I think there is about a 50-odd point recovery on the Nifty, which has come through. We were down about 500 plus points. We're down 450, 24,266. We'll have the intraday come up on your screen. It doesn't look like a sharp sort of jump or anything. It is not, but it is about a 50, 60-odd point recovery from the day's lowest point. I mean, advanced decline has also improved a little bit, 10:1 in terms of declines to advances right now. And I just want to make a quick mention of a few names here. Motherson is down 6%, if you can have that up, about 182 on Motherson. There is LIC Housing, which is down 5.5. So now volumes are picking up. I mean, they were kind of lacking in the morning. Titagarh is down about 4%. Phoenix, I mentioned earlier. CAMS is down about 4.5% and Kalyan Jewelers is down about 5% right now. KNR Construction, Electrocast, Sobha, Sudarshan Chemicals, Nucleus. Nucleus, of course, is the big 10% plus cut. Otherwise, you're basically looking at between 5 and 6, 7% cuts coming through across the broader markets right now. On the upside as well, there was very little which was doing well, but there are a few things now which are actually up and up in a pronounced way. So UPL, of course, 1.5% at the day's high. Sun is up a full 1%, 1.25% actually. And delivery, which we highlighted with Mangalam earlier, is up another 1.6%. Actually, delivery is the top volume traded gainer across the board right now. Look at Newland Laboratories. Newland went up, I think, 20% on Friday. It's up another 6% this morning on significant volumes. There is DMart, Avenue Supermarts, which is up 1.5%. So now it's kind of opening up a little bit with a lot more clean signs. For example, I can spot 2% higher. Dhanuka Agrotech is up 5%. TTK Prestige is up about 3.5%. Senco, another jeweler, is up about 1.25%. So I think, a more sort of things are starting to settle down and people are venturing out on the long side as well, as you can see from some of these names that I mentioned.
Well, that's right. Prashant, and if you look at it, even some of these insurance companies have come off the low point of the day. SBI Life was down closer on 3%. That's recovered a goodish bit. Remember, these have been underperforming sectors, but the insurance sector has come back, and now SBI Life as well from the low point of the day has seen a good fight back. HUL, well, that's been a rank underperformer. Just take a look at that stock. It's moving higher. Why are these FMCG stocks looking good? Well, maybe a coalition government would mean further, focus on rural India. Also, we know that now pricing growth has come back. For the last year or so, we haven't seen any pricing growth. But that's coming back as well. So that's why it appears that the FMCG index is somewhere that the bulls want to hide out there. And it's a good recovery actually from the low point of the day. As we speak, we're at around 24,300. Holding on to this pullback is going to be extremely important. For the time being, slip into a short break. You come back. We'll continue focusing on the top stocks that are moving around. We also get Nagaraj Sethi of HDFC Securities, who will be joining in for some technical trades.
Welcome back. We're focusing on some specific stocks now. UPL is on the radar. Remember, the numbers weren't too great, but it seems that some of the brokerages are being a little optimistic to see the volume growth. Let's go across to Sonal to understand this better. Sonal.
Well, yeah, 16% volume growth, that is something that the street seems to like. And the second part is reasonable valuations. That is something that could provide support to the stock and is providing support to the stock today. Jefferies is a buy call with a target price of 665 rupees a share. The company reported a net loss in Q1. However, the healthy volume growth of 16% is something that offsets sharp price decline, and management has retained its FY25 outlook in terms of guidance as well. But Jefferies has gone ahead, cut their EPS by 2% for FY26 and 27, while FY25 cut is sharper as well. HSBC also has a buy rating with a target price of 635 rupees a share. According to them, also first quarter was a miss versus their estimates, but volume growth is something which they are positive about. Stability in prices, inventory rebalancing is key to recovery from here on, and the company is talking about rights issue, other initiatives which could cut down their debt. That could be another positive for the stock. Investec remains a seller on the stock with a target price of 385, which is a big decline from the current levels. Management indicated price decline has been largely arrested and they do not expect any further decline from current levels. The stock trading at 17 times is one of the cheapest in the agrochemical space, and it is a large manufacturer of agrochemicals. So by that scale, they like the valuations. And on the back of this, the other agrochemical space stocks as well, insecticides, Dhanuka Agrotech, all of them are buzzing in trade today.
Okay, all right, got that, Sonal. Thanks very much. So UPL managing to buck the trend in such a weak market. We've got a 2% pop on that stock. Let's go back and revisit LIC Housing Finance. This is a stock reeling under the earnings impact. Vamakshi, back to you. So just tell us where the weakness was.
Well, absolutely. Let me first start off with the disbursements. Disbursements came in at 12,915 crores. This is a sharp fall of almost 29% sequentially. The disbursements, however, were up nearly 19% on a YOY basis. Because we're seeing a very sharp fall in the deposits, the AUM growth was also rather muted. AUM at 2.89 lakh crore was up only 4.4% on a YOY basis and up only 0.6% sequentially. On AUM growth, the management believes that clocking 10% growth for the year looks quite challenging. However, they aim to clock nearly 8% plus growth as far as the AUM is concerned. The NIMs also fell for the company. They came in at 2.76% as compared to 3.15% seen in the previous quarter. The management is now guiding for NIMs to range between 2.75 to 2.8% as compared to an earlier guidance of 2.7 to 2.9%. NII too is seeing a downtick, down nearly 10% YOY and 11% sequentially. NII has also come in much lower than what we were expecting. The asset quality, however, remains steady for the company. GNPA stands at 3.29% with NNPA at 1.68%. But the net profit has also declined by nearly 1.8% to 1,300 crores. So overall, it's a weak set coming in for LIC Housing Finance. We're seeing muted growth on the AUM and the NIMs have contracted.
Okay, all right. Thanks a lot for that, Vamakshi. By the way, from the FMCG pack, ITC has taken support around its 20 DMA. Now, if you can pull through the low of the day, it's around 479 rupees odd. The 20 DMA, that comes in at around 474 rupees. And from there, in fact, it's seen a good bounce. So ITC, given its weight on the index, that's going to be the important one to track. If you plot that 20 DMA, it'll give you a better picture in terms of the support levels as well on the technical basis. So keep an eye out on that one. But the stock that's getting a hard hit, well, it's Bharat Forge. Sudarshan joins us to fill us in with exactly why. Sudarshan.
So Bharat Forge is in focus. The stock is sharply lower and it has slipped to lowest levels in last 2 months. And this comes after the release of North America class truck orders. And this North America class truck orders have come in at a 15-month low. And the fall is for the second straight month. It has fallen both month on month and year on year. For the July orders, it's down 8% year on year and down 5% month on month. And FTR analyst, FTR is the body which releases North America class truck orders. Its analyst says year-to-date order levels are marginally below historical average and seasonal expectations. Also, but market fundamentals remain relatively consistent. And now the focus shifts to earnings, which company releases on August 8.
Okay, all right. So those North American truck orders not looking very inspiring. Thanks for that, Sudarshan. So that's another stock in focus. Now, SBI, of course, has been reacting to numbers. It was a bit of a mixed bag. I mean, overall, not much issues, except the fact that provisions and slippages have been slightly on the rise, and a bit of a compression in margins also came through. In a conversation with CNBC TV 18, SBI Chairman Dinesh Kumar Khara commented on the bank's positioning to move yields forward on the impact of LCR on the lender. Take a look.
I hope that we should be in a position because whatever increase in deposit rates have also happened, even our MCLRs have also gone up of late, and we will be in a position to have the better yield on advances. Our yield on advances have already moved to about 8.86%, and we should be in a position to improve our yield on advances going forward. So that is something which will help us in ensuring that our NIM, we should be in a position to protect around these levels. We are having a pipeline is about 4.76 trillion, and it is equally split between proposals in pipeline and also proposals which have been sanctioned but awaiting disbursement. So I expect that, of course, when it comes to these corporate proposals, the disbursement takes some time. It does not happen immediately. But yes, of course, a significant portion of that, at least part of it, will be availed. This is what we expect. So I think I expect that we should be in a position to maintain our earlier guidance of about 14 to 16% kind of a growth, and more towards 15% kind of a growth. As I mentioned, that these are all temporary aberrations. That is something which has caused these slippages, and I don't expect that it will have any permanent impact on the book. And all the subcomponents of the book are faring well. And we have actually seen that SMA 1 and 2 as compared to previous year have also come down from about 9,300 in the first quarter in the previous year. It is now somewhere around 7,900 odd crore. So that is something which we have seen. So I think it's a very clear reflection that when SMA 1 and SMA 2 are much lower, that asset quality is not a challenge. And also, if at all you will look at the slippage ratio, it is actually 10 basis point down as compared to the first quarter of the previous year.
Okay, well, that is the SBI chairman on specific bits there. We'll come back and play out more of that. But let's bring in our technical experts as well. Nagaraj Shetty of HDFC Securities is with us. Markets are at about back above 24,300. So for now, it does look like the low of about 24,200 has held. The low today is 24,192 to be precise. Nagaraj, what would you recommend one do here?
Hi, good morning, Prashant. Nifty has been a downtrend after forming a new all-time high around 25,080 odd levels. I'm expecting some more decline is in the short term, and probably around 24,000 is going to be a good support for the market, and I'm expecting upside bounce. For the short-term traders, one can go for a short in the F&O stocks, and for investors or long-term traders, probably wait for some more decline, probably around 24,000 to bounce back from low levels.
Okay, so that's the sense of the Nifty. Nagaraj, just quickly, I mean, there's a lot of selling in auto stocks. This started even before the big global sell-off, right? We saw that even as the monthly sales numbers were trickling in. M&M now is down 3%, Maruti, etc., all lower. Any trades here? Maybe on the downside, if not the upside, or would you stay away?
Better to stay away because already auto sector has already declined in the last 3 sessions, and today's candle formation in sector itself is not that great for the bears. I think better to stay away at least for 1 or 2 sessions to get the things clear, and one can enter at the lower levels.
Okay, let me ask you about the other side as well. It's very clearly a risk-off day, so it's all about FMCG and pharma, Lever 1.5%, Sun, Nestle, Tata Consumer, Britannia. In this entire pack, just technically, what looks like the strongest stock? What's the long trade that you'd take, if at all?
In FMCG has reacted from the downward. I'm not that bullish on the FMCG. I'm expecting further consolidation in FMCG. And in pharma, looking attractive at this point of time. It has been a resilient during weak broader markets. And in Dr. Reddy and Divi's Lab are the one, they are showing some strength at the lower levels at the current point of time.
Nagaraj, your own trades this morning?
I don't have any trades in the scripts discussed as of now.
Okay, all right. No individual sort of trades at all, right? Got it. Thank you very much, Nagaraj. I mean, I think not having a position, not having a trade is also a trade. So that is Nagaraj Shetty of HDFC Securities. So 400 points lower. We are slightly above the 24,300 level. We'll take a break. We are back. We put the focus on commodities, which I think are also selling off. Oil was down 3, but it's not just that. There's more happening. Manisha on the other side. Stay tuned.
And finally, we're talking about Blinkit taking market share away from e-commerce deliveries and products like tech gadgets, sports, etc. on the platforms too. With all of this, the cash on their books also has jumped by about 1,000 crores in the last 4 quarters. What this has done is that the company's had an annualized profitability of close to around 1,200 crores. And Blinkit itself is valued at 20 times more than what Zomato paid for it in 2022. So that really has been the growth driver. As Deepinder Goyal had earlier said, that Blinkit would drive more value for shareholders in the next 10 years than Zomato. And now they've gone ahead and revised the guidance to 1,000 stores by March 2025 to 2,000 by 2026 with profitability as well. Additionally, now the street is very excited about the prospects in their going out business. The company says the use case in the going out business has increased to movies, sports ticketing, live performance, shopping, staycations, etc. And their new app, which is District, will cater to this going out business. A claim by the management suggests that going out will be the 3rd largest B2C business emerging out of Zomato. Remember, the company has earlier confirmed being in talks with Paytm to buy their ticketing business. So this is something that the street will be eyeing, especially given the sort of rise that we've seen on Blinkit itself. And brokerages understandably have increased their estimates and targets on the stock. CLSA has increased their earnings estimates by 6 to 36%. And it really has been summed up well by Motilal Oswal, who says that Blinkit defies attempts for them to value the stock fairly, even as food delivery business is stable and medium-term visibility is strong. Zomato, a 7 times move here was the journey.
Well, let's focus on the insurance space. And it appears that the bulls, well, they are back interested in the insurance companies, or at least they're looking to get insured, it seems so. Because in the last 1 month or so, if you look at it, well, the Nifty is up close to 4%, but these insurance companies that actually underperformed, they have come back into play. And in the past week, they're up anything between 10 to around 15%. What went so right? Well, let's put up a few factors out there. There was no adverse regulation that came in the budget. One of the fears was that maybe, in fact, the taxation that they pay, that could be moved up a little bit. That didn't happen. The second factor was, in the last budget, we saw that traditional products, where the premium was more than 5 lakhs, it came under the tax net. Well, the fear was that even those below 5 lakhs premium, that as well could get caught up. So that didn't happen as well. And the third factor was, currently, if your ULIP premium is less than 2.5 lakh, well, it doesn't attract tax. The fear was that as well could have been brought under the net. And all those three didn't take place, so the street was happy. The other factor was that the impact of the surrender value. People were fearing that this could happen.
Okay, about 400 points down on the Nifty, but let's figure out what's happening in the world of commodities. We have Manisha with us in the studio now. Manisha, yen carry trade, non-farm payrolls, Israel and Iran. I don't know what all to look at this morning, but you tell us, what does it all mean for commodities today?
Well, not so good, really. You could have seen a lot of safe haven premium come in for many of these commodities, but even that is not coming. Remember, the dollar index is now trading at a 5-month lows. We've broken below 103, and many of these are dollar-denominated commodities. But even with that, there's not so much of a support. That is the kind of risk aversion that we are seeing in the global markets. I'll start with the crude oil prices, though, and many of these industrial commodities actually ended July deeply in red, and August hasn't started so well for them in any case. The WTI crude prices are trading at an 8-week lows. You have Brent at a 29-week lows, and the crude products like heating oil is trading at an 8-week lows as well, and that's pretty much the case with other crude products also. Well, you have been looking at weak manufacturing data that has come in from US, from China, and from Europe as well. Add to that the US unemployment data that also came to the 2021 highs. The wage growth has been slowing. So the US manufacturing data, while that has been on the weaker side, most of the big corporate earnings also seem to be missing their targets, and that is what is weighing onto the space here. Well, yes, there are some positives as well, and is the reason perhaps you have seen some stability come in the Asian markets for many of these commodities. The Fed rate cut possibility for the month of September definitely seems to be supporting prices. The Middle East tensions, where we did see Israel airstrike hit nearly 2 schools there, and there are 30 to 40 casualties there as well. And then Iran warring retaliation is another thing. So the markets are getting bothered about regional war picking up in Middle East, and that should be adding some premium to prices, but we haven't seen that happen. OPEC and allies meeting also came and went, and they've stayed on course with voluntary output cuts from the month of October, so no changes there as well. But I do want to take you to the price movement that we have seen in case of crude oil prices in this current year. So we started this year on a weaker note in any case at 70 for WTI and Brent at 75. And as you can notice that the difference between WTI and Brent has been holding at around $5. That's exactly what we saw when we saw the prices run up as well in the month of April. So the first quarter for the crude oil prices was very bullish. So was the case in the month of April as well. And 86 and 91 also is a $5 range there. That's exactly what we saw when the prices went for a huge profit taking by the month of June. And then we saw some gains come in for July. It was still in 80s that we were trading, but the narrower range is now in play here, where you can see just about $3 of a difference between WTI and Brent there. And we have seen from those 80s to 70s right now. So from the highs that we saw in the month of July itself, we are down by almost $10, as you can see in both of these prices. And August is just about begun here. So in last 15-20 days, is the kind of decline that we have seen come in for both of these crude prices. Also, when you look at on a week-on-week and a month-on-month basis, we are down by 3% on week and 10.5% down in last 1 month itself for the crude oil prices. Much has been factored in right now, but what the street will watch out for today in the trade is, one, you have the US services PMI numbers coming in, and second, most importantly, you have San Francisco Fed President's speech as well. That would give you further guidance on what the interest rate cut could look like. As of now, 100% probability of a 25 basis points and 63% probability of a 50 basis point rate cut. I mean, things really keep getting interesting from here.
Okay, all right. Manisha, thank you very much for that. By the way, anything on the crypto markets, Manisha, that you've been tracking?
Well, very sharp decline. If you look at the Asian markets right now, we've seen Bitcoin, Ethereum both decline between 5 to 7%. But would be more interesting to see on how the Indian markets really pan out with the way WazirX really seems to be going. And remember, there are huge Indian participants who've actually been holding their holdings on the exchange there. And WazirX did come out with a 55-45 approach when it talked about letting people take some withdrawals or even trade here. But that has seen a huge backlash as well. What we do remember now is, what we do hope now is that WazirX is expected to come out with new proposal. That would be in the next 2 to 3 weeks as well. So maybe newer rules now for crypto and how Indian participants actually do take their profits or monies out of WazirX or crypto for that matter is something that the street will watch out for. But at this point in time, if you look at the last 1 week itself, crypto as a sector also has seen very sharp losses. So overnight, we've seen 5 to 7% of a decline. In the last 1 week, we are down by anywhere between 15 to 20% for many of these cryptocurrencies and altcoins.
All right, Manisha, thanks very much for that. So more on that as we go along, but that's a quick roundup of what's happening across commodities as an asset class. We're down about 430 points still, so 24,286, back under the 24,300 level. So there's a bit of a back and forth, but I mean, at least 400-point cut since the beginning of today's trading session. The low is 24,196, 192, I think, that was in the morning. And then from there, the markets picked up a little bit. So market breadth is slowly creeping up, but, so we were up, only 200 stocks were in the green. Now you got 300 stocks in the green. And about 2,100 stocks, almost 2,200 stocks actually, which are in the red. So the advanced decline ratio on your should come up on your screen as well.
By the way, Prashant, I really want to mention this global picture is just not stabilizing.
Yeah.
Japanese market is now down 7.6%. That's the headline index, the Nikkei. The South Korean market is down 7%. So this huge pressure across Asia, that's unrelenting, at least as of now.
So in that sense, the 1.5% cut here it seems orderly. And absolutely, it seems orderly here. I mean, there are some headlines that trading is being halted on this exchange, that exchange, all kinds of things. But here, I mean, you're down about 1.5%, 1.6%. So, sort of entirely par for the course given what's happening in global markets. Well, we'll take a quick commercial break here. We're going to come back in just a bit from now. There is, of course, also the RBI policy decision, which is scheduled for later in the next couple of days. So we'll have our Citizen NPC show coming up. My colleague Lata will be in conversation with the CNBC TV 18 Monetary Policy Committee to discuss what the RBI will do in August. Stay with us.
An envelope calculation told you that it won't have more than 1.5% to 2%. But nonetheless, that was a bit of an overhang on some of these companies. But the managements have indicated that they are trying various ways to wriggle out of this. And few factors that they have been talking about is that the agent's commission, well, instead of it being paid all upfront, it could be delayed. It could be paid in a bit of a staggered manner. And also they're looking to squeeze in maybe a clawback clause. So that's what could help them as well and mitigate the fall of the surrender value out there. The industry basically is coming together, and it appears they're looking to bargain with the agent's commission. The third factor is, if you look at the results, they're fairly good. Whether you look at the APA or the VNB, they were fairly good in the past quarter itself, though margins, the VNB margins did come in for some pressure. But now the street is calling for bottoming out of the VNB margins. How is that? ULIP as a percentage of the total mix, that had gone up drastically. Now the indications are it's hit peak, and maybe in fact it'll pull back. Remember, ULIP margins are in fact relatively lower than the other products. So because of that, in fact, maybe bottoming out of VNB margins is something that the street is looking forward to. And finally, if you look at the valuations, if you look at the reverse, DCF, it implies that the street is now factoring in single-digit growth on the VNB. But maybe, in fact, it can grow in mid-teens or maybe high teens as well. If that's the case, then it has some valuation comfort. And even if you look at it on a price to EV basis, well, then in fact as well, it's not out of whack. It's more or less in line with the past averages. And some of them are in fact trading at a bit of a discount as well. So the short point is insurers, life insurance, they came back, and the bulls, they got insured, at least in the recent past.
It's perhaps too early to call it a full report card because it's not a full accounting of things. As you said, what we're basically trying to do is looking at how earnings expectations for FY25 have changed in the last 1 month for companies out of the NSE 200 list. And these are the top tracked, well-owned companies, liquid, large, mid companies. And how many have seen upgrades to their full year estimates and how many have seen downgrades. So the reason I say it's not a full accounting, if it's not even half the accounting, is because only 70 have reported out of NSE 200 as of yesterday's close. But out of the 70 which have reported, I think the numbers are pretty,
Welcome to the Citizens Monetary Policy Committee meeting. The global events may change things dramatically for the Reserve Bank and for its Monetary Policy Committee, which announces its decision on Thursday. Whereas during the June policy, the Fed was expected to cut rates by just 25 basis points once in 2024. Now the markets are expecting a 125 basis point cut in 2024 itself. So what should Reserve Bank and its MPC do? As always, CNBC TV 18 Citizens Monetary Policy Committee meets to give us an idea of the issues before the RBI. I have with me Chairman of our committee, Dr. Pranab Sen, and members Shamikanti Ghosh of SBI, Sajid Chenoy of JP Morgan, Shamiran Chakraborty of Citi, and Sonal Verma of Nomura. Gentlemen and Sonal, thank you very much indeed for joining us. Sajid, first delineate the global scenario for us. Will it not be a pressure on the RBI and MPC?
Lata, good morning. I think this is the biggest change between the last monetary policy meeting and this one. We've been making the case for global resilience for the last 2 years now. The global economy has been remarkably resilient. But that resilience was predicated on two phenomena. One, that the US exceptionalism would fade and Europe would start carrying its own. And the second was that even as the services sector slowed, that manufacturing would recover and you'd get some kind of goods recovery. Both those hypotheses have been severely challenged over the last few weeks. We've seen very disappointing PMIs mid-year. If you take it literally, the global output goods index is down by 2.5 points, which means essentially global factory output has come to a stall, A. B, we've seen Europe has disappointed. So the US is the only growth engine. China has been disappointing. But I think most importantly was the crack in the labor market that we saw last week. I think what we're seeing now is that this is the fourth consecutive increase in US unemployment, and the SARM rule, so to speak, has been triggered, where the unemployment rate is now almost a percentage point, 0.9 percentage points higher than the cycle low. Yes. We also had last week, for the first time, only 49.6% of US businesses increase headcount. This number has only been below 50% once when you're outside of a recession. So there are ominous signs now that the global economy is not getting the resilience from manufacturing and from Europe, and that you're seeing cracks in the US labor market. It's too early to say that we're in the midst of a recession. This is only 1 or 2 data points. And remember, we had Hurricane Beryl, which may contaminate the last data. But no matter how you cut it, this is a worrying slowing of global momentum. And even if we avoid a US recession, given where the labor market is, given the slowing in the last few months, given how wages have slowed, given how core inflation has slowed, the Fed is offside by at least 100 basis points. So even if you don't get a recession, our sense is both in September and November, you get a 50 basis point cut. In fact, I think there's a strong case to be made from a risk management perspective that the Fed possibly even cut before the September meeting and not wait for things, because recessions are very non-linear. and you don't want to be caught on the wrong side of this non-linearity.
Fair point. That's the market expectations for you running on the screen. 125 basis and 50 basis September can be advanced is what Sajid is saying. Sonal, there is in addition a Chinese deflationary impact, which is perhaps already showing up for us in terms of low core CPI in India. You tell us, will the RBI need to change its inflation and growth forecasts already?
No, Lata. I mean, we think they'll maintain 4.5 on CPI and 7.2 on GDP. I think we did get an upside surprise on food, particularly vegetable prices, which means that the second quarter CPI forecast of the RBI, which is currently at 3.8, will need to get revised higher a shade. But since this is driven by vegetable prices, which tend to mean revert, and the positive progress on monsoons, which actually bodes well for the broader food basket, we think there'll be an undershoot on food as well as headline inflation in the second half of FY25. So very much on track despite the upside on vegetables and the expected pickup in telecom. I think most importantly, Lata, I think the RBI's concern has been that inflation is not aligning to the 4% target. Our view is inflation is already aligned to the 4% target. Core, all measures of underlying inflation have been sub 4% for quite some time. And given the crack we are seeing in global commodity prices, it means that the increase we had seen in commodity price pressures is going to reverse going forward. And as Sajid said, there's downside risk growing to US growth and therefore over time to India as well from a growth perspective. So no change as of now in terms of FY25 numbers, but downside risk to growth as well as to inflation over time, I think, have increased.
Okay. Well, there is another problem as well, the fight for deposits. Soumya, let me come to you with that. With the new LCR, liquidity coverage rules, the fight for deposits could get worse. Should the Reserve Bank think of a CRR cut even before a repo rate cut?
I think that's a very valid point because the issue with the deposits is now becoming more of a structural one. As you know that in the budget also there has been some adjustment on the tax treatment across different asset classes. The most important point regarding the fact that the deposits are not growing. Deposits are growing, but not to the extent which credit is growing. For example, this year, even after last year, the deposit growth was 13.5%, which is a very healthy amount. This year, the incremental deposit growth has rupees 7 trillion as against 10 trillion last year, which is still a very healthy growth, but not as much even if you look into the aspect that the deposit rates were hiked by several banks. The problem with the deposits, and I rightly pointed out LCR, is that deposit rates are unlikely to come off in a jiffy anytime now, because as long as you don't have a treatment of the deposits of uniform across all asset classes, I think it will be very difficult for the deposits to pick pace with the credit. And to your question of the CRR, I think that's a valid question because at the end of the day, as you know now, liquidity is now managed more on a real-time basis. We have been included in the bond index, so that makes the capital inflows also very volatile. That also makes and as you know that the government cash balances now is a very important factor in the entire scheme of things, given the fact that government has moving to the JIP. That means that fund balances also will remain a constraining factor in freeing up liquidity for the banking system. So my sense is that it may be a good idea, and we have discussed this earlier also, that to make CRR and LCR as a cyclical to manage liquidity over a point of time, because in my sense, even if in hypothetically for the central bank wants to cut rates at some point of time in the future, it will be it may not give us still a signal that repo rates and lending rates will come down from the current levels.
Fair point. You know, we are getting carried away, Samiran, by the way in which there was a meltdown after the Friday jobs data. But otherwise, the financial conditions were actually described as loose. We had the SEBI chairman, we had the RBI governor, everybody speaking about, this F&O and, financial worries about financial stability. So can you develop on what Soumya is saying and how the MPC and RBI may approach financial conditions?
So Lata, first to start with, the crude indicator that everyone tracks is the banking system liquidity. And in banking system liquidity, we'll see that durable liquidity is now more than 4 lakh crores. And even the system liquidity, the frictional liquidity, the last print has been 2.7 lakh crores. So clearly, liquidity is, in that sense, ample in the system. And if you extend it further to a more broader financial conditions index, which will capture not just this liquidity, but also the short-term and long-term rates, the FX markets, the equity markets, the credit markets, everything. In fact, what shows up clearly in that index is that it tightened a little bit around April, May, but from there on, it has loosened up again till now. And then all through the while, I would say that by our understanding, these financial conditions have remained somewhat easy rather than tight. So in that sense, it is possible that the RBI can keep their stance as well as their policy rate unchanged for a longer time without being worried of the fact that they have over-tightened the system. And I think that's a very important thing to keep in mind, that we should not just be looking at the repo rate in isolation, but look at it in the overall context of where the financial conditions are.
Oh, absolutely. The liquidity, if you count what is with the government, 4 lakh crore. So where is the argument for a CRR cut? It's probably even for a hike. But Dr. Sen, the other big point which the Reserve Bank has to consider is the fiscal deficit, which has come down more dramatically than the Reserve Bank would have contemplated even in even in the June policy. So putting that and the other lead indicators we have of growth, what do you think the MPC should do? Remember, 2 people have already been asking that there should have been cuts already.
Well, Lata, it's not just what's happening to the fiscal deficit. What is important is that what the budget signifies is the overall fiscal stance. What the government considers important, what it doesn't, and what the macro dynamics arising from that are likely to be. Now, if you look at it in those terms, the way the budget has worked out, yes, you've got the fiscal deficit coming off much more than had been targeted, and most people hadn't even expected this. But much more importantly is the way the government has actually played around with the expenditure side of the budget.
Yeah.
And the expenditure side of the budget tends to suggest that if one looks at it a little carefully, the pace at which government expenditures will move will be higher than what we had last year.
Yes.
And that is the important thing. So there is, as far as monetary policy is concerned, you have a situation where the government draws on its balances. It's going to be large. Which you will have to keep an eye on. Now, this is a short-term thing. It evens out over the course of the year. But the point is that everything depends upon how the pattern of government expenditure correlates with the cycle.
Fair point, sir.
And that is something we need to keep our eyes on. And the RBI will certainly need to keep its eyes on that.
Fair point, sir. So liquidity, that adds, if the government is going to spend very quickly, that will already ease. So need the MPC or the Reserve Bank do anything? That question after the break to my experts. Also, there is a neutral rate which the Reserve Bank has kind of put on the table. All those questions after the break to the members of the Citizens Monetary Policy Committee.
40 have seen EPS being downgraded. Only 18 have seen EPS numbers being upgraded. And mind you, out of these 18 companies also, you got lots of, about 4 or 5 of them where the upgrades are about 1%, 1.5%, small upgrades. So I'm counting for that as well. So this is essentially the list of companies which have seen the largest downgrades. I'm not putting out all of them, but Bank of Maharashtra, Paytm, which of course was a big mover, but for other reasons, JSW has seen full year 25 earnings being taken down 12%. There is Loris, a lot of tech companies, right? Coforge, Tata Elxsi, Tata Technologies have seen these downgrades. Tata Communication is another one which is down about earnings around 6%, marked down by the street. These are all from sort of Bloomberg consensus estimates. Asian Paints, Dalmia Bharat, and SRF as well. As I said, total of 40, but the top ones there. Now, which are the companies which have seen upgrades? You'll find a lot of insurance companies here. So look at this, ICICI Pru, there is ICICI Lombard, SBI Life, HDFC Life. This is the cohort which has seen the maximum upgrades. There is asset management company, HDFC AMC as well, which has seen about a 8% upgrade. Others, there is Suzlon, Kotak Bank, Canara Bank, and a BPCL out there. So 18 here, but of course I've not put all of them, but the top upgrades which are really coming through. Markets continue to do very well, and I hope that as the earnings season proceeds and we get to the 50% mark, and then of course beyond that, you get more positive surprises because at the end of the day, stocks, at least in the medium to long term, will return what earnings return. So you need earnings growth to pick up substantially. At least till now, from what we've seen, that has not been happening.
I'm under a gag order, nasty gag order. We have a judge who's highly conflicted. You know what the confliction is. Nobody wants to write about it, and I'm not allowed to talk about it. If I do, he said, I get put in jail. So we'll play that game a little bit longer. We won't talk about it.
While this defendant may be unlike any other in American history, we arrived at this trial and ultimately today at this verdict in the same manner as every other case that comes through the courtroom doors, by following the facts and the law and doing so without fear or favor.
The Indian market sees a sharp sell-off at the open following weak cues from Wall Street and Asian markets. Sensex trades below the budget day low. Mid-caps are the worst performers this morning.
Titan slipped nearly 2% but has recovered from the lows of the day after its quarterly results, which were in line with already muted expectations. But the management tells CNBC TV 18 that they see encouraging signs for the remainder of the year.
LIC Housing Finance down nearly 6% after posting its quarterly results. Disbursements around 30% sequentially. The management believes in clocking 10% growth in assets under management for the year seems challenging.
Bharat Forge is down nearly 5.5% after North America Class 8 truck orders fall to a 15-month low. The orders have declined on a year-on-year basis for the second straight month.
Delivery climbs nearly 2% on the back of good operational performance. In the first quarter, the company reports its third straight quarter of positive EBITDA. Net profit aided by change in depreciation method.
Hello and welcome to Chartbusters on CNBC TV 18. I'm Hormus Patakia. With me is Mangalam Malu, and in line with what the global markets are selling off, the Indian markets are also showing a similar picture. It's red all across the screen, as you can see above us as well. The broader markets, the benchmark indices, all of them seeing some bit of selling pressure. The Nifty now at 24,274. The key level to track here is 27,074, which is the budget day low on the index. The Nifty Bank is down over 2%. The broader markets are also seeing some selling pressure. The mid-cap index is down 2.5%. The small-cap index is down 3%. The indices, the sectoral indices, realty, PSU banks, metals, auto, all of them seeing losses of well over 3% in today's trading session. So not a good looking screen whatsoever. Some of the top losers on the Nifty, Tata Motors is down 4.5%. Hindalco, after the downgrade that came in this morning, is down 4%. ONGC is reporting results today, is down 4% as well. So not a good looking screen whatsoever, but there are some stocks that are bucking the trend as well, Mangalam.
There are some stocks which are bucking the trend, and they belong mostly to the FMCG pack. The FMCG pack has been a rank outperformer over the last couple of months. We've been talking about 5 factors that are working for them. 1, increased focus on rural, sustained continued impact or continued containment of inflation, so to say, improvement in sentiment. So far monsoons have been pretty good, and all these factors are pointing towards a good recovery in the second half of trade, even as companies are looking at some sort of price growth coming back and margins improving as well. Everyone's eyeing top line growth, and as we see, all these FMCG stocks are doing well. So if you're looking at the FMCG screen, absolutely green, but everything else is not doing particularly well, as you pointed out, Horma. So we can say we're down. Safe to say we're not quite out yet, because we're above the budget day low. We're just below the 20-day moving average, and with the kind of rally that we've seen earlier already, I mean, just 2 days ago we were at 25,000 on the Nifty. So maybe some give back of gains which are taking place. The one pocket I'll be watching out for in particular would be the mid-cap end of things, because we've seen more stocks, way more stocks declining than the number of stocks which are advancing right now. But that number too, from the mornings, we've seen a lot more stocks recover. So when we started out, we had about 100 stocks in the green. That number has increased to close to around 271 stocks. So maybe people are looking at dips as entering opportunities. But we're not the experts. The experts are joining us right now. We have Shivangi Sada from Motilal Oswal joining in for a quick technical check on the market. Shivangi, understandably, there has been a sell-off led by global cues, global factors. At what point, does it make sense to go ahead and initiate long positions, or would you suggest stay away from a falling knife?
Very good morning, Mangalam and Hormas. Thank you for having me. So we've seen that, global markets have caused a dent to our markets, and somewhere selling pressure is intense that we've seen after the gap down. Also, we've seen more selling over here. But of course, the budget day low, which is 24,074, that level becomes important, and that would be the next support that we're looking at. Although hurdles are quite much intact, because call writers are increasing their position as well in the index. So we are looking at 24,500 as the immediate hurdle, and 24,074 as the immediate low for the index to trade. Now, talking about Bank Nifty, we've seen that this index has been underperforming from quite a long time, but relatively we are seeing that there is more strength here as compared to the broader market. So which is why we are expecting a little downfall, not much of a steep fall over here. But yes, 50,000 would be the next support to watch out, and 50,750 as the next hurdle zone over here. And of course, in this kind of market, we are seeing that India VIX had also risen in the previous session and gone above 14.5 levels, which will continue to cause some sort of concern in the market. And we are looking at some, today India VIX is, up again at 17.5 levels. So we are looking at some pockets like FMCG, of course, one sector which you closely track, Mangalam, and the next would be pharma space, which will outperform this kind of broader market.
So do your stock picks belong to these sectors as itself, Shivangi, or are there other falling knives that you want to catch?
Yes, absolutely. So my sectors are these only, and the stocks which I'm looking at is Godrej CP. This stock has come out of its consolidation of the last 9 sessions, and good amount of longs are being built up here from the morning itself. And we are seeing that the stock is, respected its 50 daily exponential moving average quite well. And of course, with the entire FMCG pack in action, we'll get a tailwind from that as well. So recommending a buy here with a target of 1540 levels and a stop of 1445 zones. Now, the second pick would be Sun Pharma, where we are seeing continuous strength over here, Poland flag pattern formation on the daily frame, and good follow-up action. We've seen a breakout in the monthly frame, so the potential upside is going to go long, and there is quite a lot of upside scope still left in this stock after the breakout. And we are seeing that this stock has been showing good amount of volumes from the last 8 sessions, which clearly indicates that buying has happened and support-based buying is quite strong. Recommending a buy here with a target of 1825 and a stop of 1720.
Godrej Consumer and Sun Pharma, the two recommendations from Shivangi. Thanks a lot for that, for your stocks as well as the indices as well. Now let's shifting focus to our special segment where we get you a few ideas for profit from Money Control Pro. Madhuchanda Dey of moneycontrol.com joins us to talk about a stock that she is tracking very closely.
We are talking about IndusInd Bank that had a soft start to the fiscal given the deceleration in the loan growth. The management attributed the same to heat wave and the election disruption, which led to sluggish disbursements in vehicle and the microfinance book. However, thanks to the deposit catch-up, the credit-to-deposit ratio has moderated, creating headroom for growth as the bank is quite confident of growth catch-up in the remaining part of the year. Net interest margin, fees, as well as asset quality were all stable. However, asset quality warrants close monitoring given reports of stress developing in certain pockets of unsecured retail. Due to the sluggishness in earnings, cost-to-income ratio looked elevated, although the management hinted at peaking out of operating expenses. While we expect some moderation in the near term in its return on assets or ROA, should the bank succeed in negotiating the challenges coming from stress building up in few pockets, the stock has enough room to re-rate given its undemanding valuation.
All right, let's see whether that happens or not, because currently we're seeing a fresh round of sell-off, and most notably in the IT pack. So you just pull up something like Infosys, that's at the low point of trade. We're seeing some decline even in the banking pack. So we have SBI, which has moved to the low point of trade. Axis Bank has been trading lower as well. So at the low point of trade for the IT pack as well as some of these banking names that we're speaking about. We're talking about pharmaceuticals being a bit of space of strength right now, but in that as well, individual names, the ones most notably impacted by results, are falling further. So case in point, something like a Devis Lab, which is also down about 4%, and the Nifty Bank now down 1100 points, with the Nifty making its losses move towards that 500-point mark. So 2% lower. It's a fresh round of selling that we're seeing. The Nifty Bank at low point of today's trading session, with the Nifty falling about 500 points. A fresh round of sell-off coming back in the IT space. Hormaz, anything that you're picking up from the globe?
The one pocket that I wanted to mention before we get to the globe, though, about the pharma pack that you mentioned, Newland Laboratories is one stock that has been bucking the trend. It was up almost 8% on Friday after the results, and the positive commentary from the management, it's up another 3.5% today as we speak. So that is one stock that is bucking the trend. The index heavyweights are leading the stock, the index lower, of course, Reliance, HDFC Bank, ICICI Bank, Infosys, all of them contributing towards the index downside. The Nifty now moving towards 24,200, and Samvardhana Motherson is the one stock that I wanted to point out. That stock is now down 8.5% as we speak, and that is also because some bit of rub-off coming in from the global parent as well, the Sumitomo Corporation. That stock is down 14% in the Japanese markets, and that is having a bit of a rub-off on this stock as well. So some fresh bit of selling coming in on the benchmark index as well as some specific stocks as well. But time for a short break here on Chartbusters. More on the markets and specific stocks on the other side. Stay tuned. We'll be right back.
My wife, for instance, and she's been such a big contributor in what I've become eventually. I think some of the soft skills actually, and these are aspects, and the ability to without getting sort of stressed, being able to manage many different things. I'll just give you one example. When I was a CA, typically, and many of the advisors, the Indian Economic Service actually are women. They would be in a meeting with me maybe at 3:30, 4 or something, and they'd get these calls actually, and they would be, because they're in a meeting with me, they would be, declining those calls. If the call comes twice or thrice, I knew this was actually either their kid or their mates calling basically for what needs to be made for dinner. Yeah. And so because that's exactly what, my wife, so when I was at ISB, it's the rare occasions when she was not instructing our kids or the maid to actually say what needs to be cooked. My kids would call me up. I would be at a loss actually.
Back with us here on Chartbusters, and Mangalam was just mentioning some selling coming in IT stocks, and that is also because of the Nasdaq futures that have slumped to the lowest point of the day, now 650 points lower, almost 4% down on the Nasdaq futures, almost 700 now as we speak, 3.75% lower on the Nasdaq futures, and that you can see is rubbing off on the IT stocks as well. The IT index now down all over 3%, a 1200 point cut on the Nifty IT index. But then there are plenty of earnings reactions also that are coming in today's session. Titan is one of them. It was a muted quarter, but in line with some already muted expectations. And Mangalam, what does the fine print look like?
Absolutely. It was a muted quarter. The good part is that it wasn't much worse than what the street was anticipating, and largely because the company had already given us their first quarter cheat sheet. Thereafter, we saw a big cut in the stock price, and thereafter there was a recovery that came by post the budget announcements that happened as well. So if you just take a look at the numbers, 12,000 crores on the top line, a little below street expectations, but nothing really to worry about. EBITDA at 1,200 crores were actually a little better than street expectations, and net profit at 770 crores also was better than what the street was expecting. What was good about these numbers, that the gross margins and EBITDA margins were stable for the company. Jewelry EBIT margins, if you account for the bullion sales, etc. as well, it's actually an improvement of close to around 20 basis points year on year. Then we are looking at festive and wedding season ahead, along with the tailwind of lower customs duty announced in the budget. What wasn't very good was that there was studded share, which was at close to around 26% itself. Buyer growth at 2%, and high value solitaires sentiment was subdued, telling you there could be perhaps a bit of an impact of lab-grown diamonds. We spoke with the management this morning, and they did say that they are seeing a noticeable uptick, double-digit growth in the second quarter, and definitely more so in the third quarter, given there would be the festive season. There is increased competitive intensity, so they haven't changed their margin guidance, but that is something that the street will most notably keep an eye out on over the next couple of quarters, where the margins do recover even despite competitive intensity.
Indeed, and 1.5% lower, Titan, not as bad as the other constituents of the Nifty is. But the other stock that you're tracking, Mangalam, is Britannia. And what about that?
Britannia, the results weren't bad. Results actually on the volume front were very good. 8% volume growth is what the company, reported. The stock has recovered from the lows, currently sitting with a gain of almost 1%. That's because the conference call is currently underway. The amount we could hear just before the show had started told you that the company is saying that the strategy will continue to remain that of driving top-line growth. Commodity costs are going up marginally, but they are manageable at around 5%, which is the inflation expectation for this year. They are stepping up investments on brands and innovations, and they continue to target 2% cost efficiencies every year as well. The market share gain that they had in rural this time around was 25% more than urban, so that's a positive. They've increased their direct reach in rural too, and at the same time, they are closely monitoring the commodity situation. So let's see how that goes, because year on year, while there has been a noticeable increase in commodity costs, what really has stood out is quarter on quarter, there's been an increase in palm oil, sugar, as well as cocoa. So those are a couple of things that the company will be managing going forward. But they believe that the industry is poised for good growth in FY25, led by one, better monsoon, moderate inflation, and third, reducing unemployment. So all these factors working well for the FMCG industry, in that Britannia likely to benefit a lot more given their presence in rural India.
A key beneficiary is Britannia, and showing in the stock price as well, bucking the trend in an otherwise weak market, 1% higher on Britannia. But the other stock on our radar is Divi's Laboratories, and the pharma company shares have dipped over 3% on the back of their first quarter results. Ekta is here to give us a lowdown on how the numbers were. Ekta.
Thanks for that. Well, for Divi's Labs this time, the numbers probably missed estimates a little bit, but the commentary was positive. The revenue was up around 19%. Street was anticipating 23% growth. EBITDA came in at around 622 odd crores, and the margins 29.4% versus estimates of around 30 odd percent. Profit 430 crores. The street was anticipating 480 odd crores, and it was below estimates because of higher tax expenses as well. Now, the commentary, however, was positive. They are seeing opportunities emerge from the Biosecure Act, as well as opportunities in phase 2 and phase 3 molecules. They are possibly looking at GLP-1 drug opportunities as well. So all of that has been positive in terms of commentary. They also maintain their double-digit growth guidance for FY25. However, there are some concerns with regards to valuations, considering it's at around 60 times FY25 PE, and hence there is some amount of profit booking taking place.
Some amount of profit booking taking place, 3.5% lower on Divi's Laboratories, 48.10 on the stock as we speak. Time for a short break. More on the markets and specific stocks on the other side. Stay tuned. We'll be right back.
Believe in your strength, right? What is your strength? Carry that, right? It is your deep technical knowledge, your perspective, because that's where the new ideas generate, right? So keep focusing on that. That is one thing that will give you a purpose. Second thing is networking, right? Network with people whom you come across, building the network where you can share your ideas, express them, thrash them out. That is one thing which is going to be very, very helpful in as you go ahead. Third thing, I will have to say that keep learning, right? Our industry is about change. It's just a lot of innovation every day. Even actually, sometimes it is impossible to catch up with everything. So keep learning. Wherever is an opportunity, learn it, right? And the last but not least, resilience, right? Don't get disheartened by a failure, right? Failures will happen. Learn from it.
One particular moment, so I actually come from a very humble background. My father lost his father when he was just 7 years old, and just completed school. I was the first person in my, clan to go to university. So when he first came to campus, and I took him to the library, the Vijay Kelkar library there. I remember him actually being very emotional and saying, at least in my next life, I get the opportunity to study in a university like this. So that moment is something which is etched in my memory. I'll be absolutely honest, I did not even know what a chief economic advisor is at that time. If somebody said I'll be X, Y, or Z, or even executive director, I don't think even I knew what the International Monetary Fund was.
I came here in 1991. 1991, that was my first year of college. I came here for Inter-IIT. So I remember this campus especially, because this is one thing that I think especially the women need to hear. So I was, good in table tennis, but I became the captain because my captain dropped out. And I came here and we were playing and I won the first game. And then all the men started booing me.
Are you serious?
Yeah. And so I realized the power of mind, right? Like, I was better than the player that I played against, but I lost. And I think that was my first lesson that I learned, which is that, you might be better, but sometimes, your circumstances make you believe you're not, and therefore you lose. So I think that's one thing that everybody needs to do, and I think coming back to this campus...
We have to correct that. We have to give it a big round of applause now to make up for what happened in the past.
Welcome back. The market sell-off is intensifying. Moments ago, we spoke about the Nifty being down 500 points. Look at it now, 575 points. At the low point of trade, just about 70 points away from the budget day low of 24,074 as well. And at the same time, the Nifty Bank, that's been the key culprit, down by almost 1,230 points, 1,280 points as we speak. What is it that has led the last leg of decline on Nifty Bank? It's HDFC Bank. HDFC Bank was holding up one end of the Nifty Bank, but now that seems to have been given in as well, down at the low point of trade for that stock. So we'll keep an eye out on that one among the sell-off that we're seeing in other heavyweights that include the likes of IT, etc. Meanwhile, from the broader markets, the one stock that is looking weak right now is Trent. It's down about 5%, had seen a big rally all of last week on hopes of it entering the Nifty, etc. as well. Reports its numbers, this week. So let's see how that pans out. Down about 5%. So wherever there have been profits made, profits are being taken out, and that's the accelerated sell-off that we're seeing. But talking about earnings, ONGC is the stock to watch ahead of its first quarter earnings today. Sonal joins in with the earnings estimate and the outlook. Sonal.
Thank you for that. For ONGC this time around, it's expected to be a sequential decline across all the parameters. Revenue is expected to decline by 9%. The EBITDA is expected to be flat, but the margins, they will come in at 49.6%. Profits also expected to decline by 15% on a quarter-on-quarter basis. The EBITDA decline, this will be led by lower production that has been plaguing the stock for a while, or the company for a while as well. Lower oil production is also something that could hit the realizations this time around. Overall, crude oil sales volumes are expected to decline both on a sequential and on a YY basis, while the gas volumes, which saw an increase last quarter, will also decline both on a quarter-on-quarter and on a YY basis. The sales of value-added products is also expected to decline by 4% on a YY basis. The important commentary will be awaited for the production that they are doing in KG Basin. If there's any delay there, that would be taken as negative. If the oil prices decline below that $75 per barrel, that could also be a key risk. But of course, we do see it averaging out at those levels in the last couple of days as well. Gross crude price realization is expected at $82.8 per barrel, which is an increase of 2% on a sequential basis. Net oil price realization post the royalty, the windfall taxes that we've been talking about, is expected at $51 per barrel this time.
Keep an eye out for that, Sonal. Thanks a lot for that preview for ONGC. The other one that's reporting results today is Marico. And Mangalam, what do you need to watch out from there?
Well, Marico, we have the first quarter update as well, and the stock is doing well ahead of its numbers. The street expects improved performance on both top-line volumes as well as revenue, because the domestic business actually saw a modest uptick in underlying volume growth. The overall revenue that we are working with is close to around 8% in terms of a growth. EBITDA grows a tad higher. We're looking at double-digit EBITDA growth out there. 10% would imply 631 crores on the EBITDA, and that means that the margins would be close to around 23.5% as well. The net profit on the back of that grows to around 460 crores. This compares with a number of 436 crores same time last year itself. What is it that the volume that we're looking at? The company did say that they're looking at mid-single digit volume growth, so that's exactly what the street is anticipating, 4 to 5%. Parachute oil did well, Saffola oils did well, value added had a soft start, so let's see whether that recovers or not. Management commentary on new businesses and consumer recovery would be extremely crucial. But just before we wrap up on this edition of Chartbusters, we'd like the director to pull up the India VIX. That's the one that has risen the fastest. There is a fair amount of volatility. The Nifty now down 600 points. So the sell-off for the market continues. The India VIX has moved to the high point of trade with a gain of almost 32%. So from the time we started the show, it's jumped almost 2 or 3 points, up 5 points now, closing in on that 20 mark. So volatility is the name of the game, Hormaz.
Indeed, and that's the word of the day as well, I guess. Now 35% higher on the VIX, closing in on the level of 20. But with that, it's a wrap on this edition of Chartbusters. We leave the Nifty just 50 points away from the budget day low of 24,074. But from Mangalam, me and the team that put this show together, thank you so much for watching. Trading Hour up next.
Coach also gave me gajar ka halwa, so it was okay.
Today, she is the director for the mission that actually saw India's first private rocket being launched. So tell us a little bit more about that, Saranya, and what you did that all under 30.
They gave me an opportunity to be the vehicle director for the mission. So it was a huge learning for me to build. We started off the company by at least when I went in, I didn't know anything about the rocket building. So to building a vehicle which can actually fly, it was amazing.
Not just actually fly, it's actually flown.
Yeah.
So congratulations to you and to the entire team at Agnikul. I know for many of the students here in the room, you're a role model, but you talked about Naveen being the initial role model for you when you got started. But let me end by asking you, who do you look up to today? Which are the companies that you respect and admire? And, is there anyone in specific that you would like to emulate in your style of working?
The one individual that I have, I wouldn't say seen in very close quarters, but seen from some distance as part of my work in CII, but I truly admire is Mr. Uday Kotak. I think he has built a franchise in a bank that is truly outstanding. And to do it in one generation, and the quality of talent and the kind of ownership that that talent takes is remarkable.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. The CNBC TV 18 coverage of the Union Budget starts right now.
Hello and welcome to CNBC TV 18 Motilal Oswal Budget Headquarters. Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonia Shenoy, and I think it's a painful start to the week is the least that we can say for the kind of carnage. It's a full bear attack. Buyers are on a complete strike, and this is a global risk-off that we're currently staring at. Look at Nikkei now. That's down close to about more than 10%. It's a more than 8% fall for the Taiwanese markets and the Korean markets. And it's not that the US futures is suggesting that there is recovery in sight. The US futures are currently down. The Dow futures are down close to about 300 odd points. There are growth concerns in US. Earlier we were talking about a Goldilocks scenario perhaps with interest rate cuts coming, but now we're talking about a potential hard landing. There's a worsening crisis in Middle East. The India VIX also has shot up quite a bit. And I think now, Sonia, with the Nifty at the 24,085, we are 1,000 points lower compared to our all-time high just last week. Right, the all-time high was a figure of I think about 25,075 or 25,085. So just look at the way things have turned, right? 1,000 points gone in a few days.
It has, and I think this was expected, right? I mean, it was just a matter of time before this correction or this pullback would have come through, because if you remember, we haven't seen any sell-off in the market for at least over a year now, a year and a half perhaps. So I think everything came together. the US markets, selling off, the weak jobs data, the recessionary fears, and now our own markets as well. I look at this as a blessing because there are a lot of retail investors who never got a chance to participate in this up move. So perhaps at this point in time, although the ticker is looking a bit scary, there's no reason to panic. It's, just a matter of time before which this market will bounce back. Because remember, in hindsight, every global sell-off has been a great buying opportunity. But well, for now, looking at the ticker, things are looking a bit tough. But let's do one thing. I mean, the equity markets are going through a turmoil for sure. It is largely because of what's happening across the globe. But what's happening in the currency markets, let's also look at that. Manisha Gupta joins in to give us the latest there. Manisha, over to you.
Well, thank you for that. We are looking at a lot of movements coming in here as well. If you look at the dollar index itself, it has been declining for days now. It's trading at a 5-month lows. We've seen 103 give away in the Asian markets right now with the kind of sell-off that we are seeing in various other asset classes as well. So when you look at the last 1 month, just in sense of numbers there, the dollar index has declined by 2%. Much of those losses clearly coming in the last 1 week itself. So the Chinese yuan, the carry trade actually, by the way, seems to be doing quite well. You have the Chinese yuan trading at a 27-week highs. The Japanese yen, pardon me, is trading at a 26-week highs right now. The Korean won at a 9-week highs. We're looking at weak US jobs data. The numbers were quite dismal. And when you look at the manufacturing activity data as well, it has been on the weaker side in US, in Europe, and clearly in the Chinese markets there as well. But what the dollar index really seems to be losing is in sense of the sensitive currencies there. They have continued to decline into the markets. So you have the Mexican peso, which is trading at a 9-month lows right now. That one has declined by 5% in the last 1 month itself. If you look at various other commodity currencies, well, they seem to be taking it under the weather also. You have the New Zealand dollar trading very close to its 8-month lows. Australian dollar and Canadian dollar also trading at multi-month lows at this point in time. Well, most important thing to watch out from here would be the US PMI data for services that comes in today. And then, of course, on 18th of September, it is the US Fed policy meeting. The markets are factoring in a 100% probability of a 25 basis point rate cut. And there is also now a 63% probability of a 50 basis point rate cut as well. So quite interesting as in the market, but we have seen a sell-off in currencies and in commodities as well in the Asian markets today.
Thank you very much for that. Prateek Parekh, equity strategist at Nuvama Group, is now joining in on the show now. Prateek, morning. Thank you very much for joining in. I think you all came out with a note just on 1st of August, and it couldn't have been timed better because you're talking about how India's valuations are at the highest that we've seen. Whether you look at market cap to GDP at 150%, this was the previous peak was in 2007 when the big fall in the Indian markets, we saw that big fall in the Indian markets. And you've also highlighted the risk of extreme drawdowns when we come to such extreme valuations. What's the market called?
Yeah. Thanks, Rima, for having me over. It's always a pleasure being on the show. So I think from a market standpoint, I think clearly things have gone a bit on the higher side. Whether you look at valuations on any metric, whether it's absolute market cap to GDP, whether you look at the breadth of the valuations, where median trailing P of a BSE 500 companies at 45x, which is almost 2x of 2007, or whether you look at relative to EM, where India is the only country which has actually seen a cyclical melt up, I think things have gone very high. Now, at these high valuations, you either need the support of very large interest rate cuts or you need earnings momentum to sustain. Today, if I look at it on both the fronts, things are looking dicey. First, on the earnings part, clearly this quarter marks a decisive shift in the earnings momentum. Earnings, we have seen downgrades come through, but more importantly, profit growth is now reconciling with top line growth, and both of them are around single digits, which is not very comforting, at these valuations. But I think the large inflection points historically in Indian markets have come from global events. And I think globally is where there seems to be a regime change. For the first time in 4 years, we are seeing markets react to growth rather than inflation concerns. This, I think, is a big shift, and it will not be reversed very easily unless and until central banks go all out. There are, pockets of vulnerabilities on the global front where if delays are happening, and given how financialized global economy is, things could worsen of sorts per se. So I think from a market standpoint, we do remain a bit more on the cautious side, and we think that things are not are still very expensive, and global environment and earnings environment is moving on the opposite side per se, Reema.
Okay. Pratik, hi, good morning and thanks for joining us. It is an important day of trade, largely because, this is the first real signs of correction or pullback that this market is seeing after maybe 1.5 years, right? So what is the best way to approach it now? Do you raise your cash levels? Do you look for opportunities to buy into large cap names? Or do you just sit back and wait for this entire thing to play out?
Yeah, that's a great question, Sonia. And there are no easy answers for the same. But I think if you look at it, what I would do is definitely recommend increased cash levels, book profits in sectors where valuations are high and stocks have also run up a lot. And especially where earnings are very cyclical. For example, the industrial space, real estate space, autos, metals in India have seen a very strong rally, which is very idiosyncratic and disconnected from the world. So you would probably book profits there. But nonetheless, I think from a medium-term perspective, we do still have opportunities in large caps, and especially on private banks and insurance. This is a space where we strongly recommend a buy on dip kind of an approach, where these are stocks or sectors which are trading close to the record low valuations. And I think earnings concerns also, to a large extent, are there in the price. I think this is a space where we think their absolute return can be made on a 3-5 year perspective. And I think that is where one should look to incrementally raise allocations. But broadly, yes, raise cash levels, deploy more money in debt, and book profits in cyclicals is our recommendation.
For those of our viewers who are joining us right now, the big sort of headline, the news headline is at the bottom of the screen, which is that the market, the Nifty, is broken below the budget day lows. I mean, we've all basically become accustomed to, used to the idea that whatever comes, the market is broadly okay and drawdowns don't last at all. I mean, it's been an extremely, and I think Pratik has been pointing this out as well, it has been an extremely unusual sort of market for the last 3-4 years, with not even a 5% pullback, which should be par for the course in a strong bull market even. I mean, we saw that in between 2005 and 2007. There were lots of pullbacks. I mean, in the next 5-6 years as well. But I think ever since the low of COVID, I mean, we basically had a one-way market with very sort of few pullbacks along the way. Of course, I mean, late 2021, when the market topped out, that was the time around when some of these large IPOs were coming, like Paytm, etc. And then, of course, in the US, there was a bit of a correction. But even then, I mean, I think there was this sort of one phase of drawdown and nothing after that. So I think it's been a while since markets have, and that too in a synchronized way, taking a bit of a knock. The big talking point, the big story, which lies at the root of all of this, of course, is the fact that is the US, which has been the strongest market along with India, but of course for global markets is so much more important, finally going to see the so-called hard landing. So the consensus view was that it's going to be a very nice, gentle, slowing economy, which allows the Fed to cut rates, and that's the Goldilocks. So not too hard, growth still remains okay, slower. At the same time, it allows the Fed to gently bring down interest rates. So it's like a perfect landing, which has been thrown into question with the jobs data, which came out on Friday. I have to say, though, it is just one data point. You look at the last GDP number out of the US, which came, that was strong. And I could point to other data points as well. But I think because the market in the US has been so focused on, the Fed has been so focused on labor market, and that missed in a big way, people are questioning whether it's going to be, that very gentle, soft landing. And they've raised the odds that maybe it's going to be a little more uncontrolled, not as well orchestrated, hard landing, recession. I mean, for example, the other talking point in the market in the US is, and these are serious economists who are saying whether the US economy is already in a recession. And one of the indicators which many have been talking about is a Fed economist who basically came up with this rule, which essentially says that if unemployment rates if unemployment in the US on a 6-month average basis, moving average basis, rises by more than 0.5%, you're basically in a recession. And by the way, the unemployment rate on Friday, along with the jobs data, came very, very close to fulfilling that condition. And that's the reason why many are kind of talking about whether the US is already in a recession. What kind of a recession, etc., is another question. Whether it's going to be a profits recession, which we've not had in the US for a long time, I think, and which can really hurt. Remember, we had a technical recession in the US. The market just looked through it. This was back in 2022. But we've not had a profits recession. It's too early to kind of sort of call that. Just one more point is, of course, what's happening in Nikkei. It's not so much about the Nikkei. We've spoken about what's happened to the yen. The yen has gone from, is basically rallied 10%. I think we were at about 160 odd levels. We are at about 140 odd levels now. This is the USD JPY. So 160 to 140 means the yen is rising, the dollar is falling, that is we don't know the size of the so-called carry trade, but because the yen rate differential and other sort of market differentials were so high, the yen was so cheap, and government bond deals in Japan were so cheap, and everything else basically was higher or much higher, the differential was very, very high. That is not the case anymore, with the Bank of Japan starting on a rate hiking cycle, and that is the reason. That's the other fact, the other part, which I think is causing people to wonder whether Japanese investors will repatriate money back to Japan, because Japanese assets are going to be much more attractive. But here again, the point is, will we, with what's happening on the Nikkei, with what's happening in government bond deals in Japan, is it a done thing that they will continue what they said they will do 2 weeks ago, which is a rate hiking cycle, or that is also in question? I think it's very possible that the Bank of Japan finds it very difficult to actually continue to hike interest rates in that country as it is advertised. So there are lots of moving parts. Markets are in a bit of a tizzy, a bit of a panic, but it's not one way, absolutely not. Both on the US front, a lot of recession word thrown around, and of course, with what's happened with this 10% rally in the yen and how much more you can see. I mean, I was talking to a global technical analyst who was saying that 140 is the bottom. I mean, it won't go, that's it. I mean, the market should rebound from there. So we'll see. But for now, I mean, actually, we're already at about 142.98. So lots of moving parts. But for now, there is a bit of a reaction, which is not a bit of a fair bit of large reaction, which is coming through in some of these markets. Pratik, in terms of flows and the big thing which has helped markets, right, is domestic inflows, which is stayed rock steady. Looking beyond today, do you think some of this will be, the flow? Does this global narrative hurt local flows, local conviction? I mean, there's no way to tell right now, I reckon, but what's your best guess?
Yeah. So again, flows have been a bedrock of the bull market in India. I mean, that's why in India we have seen a very cyclical, broad-based bull market, which has not seen any other market in the world. My only 2 bits on flows is that flows will eventually chase fundamentals. And if fundamentals deteriorate, whether it's because of liquidity tightening or because of earnings slowing down, flows also will reverse course. I mean, generally things don't go in a one-way street. In 2007 as well, we had very strong flows. But when the global tide turned, your domestic flows also turned. So I think only betting on flows may not be the right approach in my view. I think one should look at the fundamentals, global risk appetite and the earnings, all of which right now are not in the best of the position. Now, as you rightly said, does this mean that markets will go one way down? Probably not. But nonetheless, it is still too early to call this a bottom and maybe, have a buy on dip kind of an approach of sorts per se, is what I would recommend.
Okay. Well, Pratik, thanks a lot for joining in. Appreciate your time here on CNBC TV 18. Just before we let you go, just wanted to mention that, I mean, let's not forget that if you sort of take a bird's eye view of this market in the last 15 years, the Nifty has given 12-13% compounded growth rate, irrespective of any recession, irrespective of COVID, the pandemic, etc. Right? So, Pratik, do you think this time is going to be different, or is that the way to approach it? That keep your shopping basket ready, maybe not now, over the next couple of months or so, and buy every dip? Is that the best way to look at it?
Yeah, Sonia. I think that's again a very important question. Yes, markets have compounded 12-13%, over the last 10-12 years, and irrespective of recession. And this time, one thing which is very favorable for the market perspective is the balance sheet. Corporate leverage is very low, so your ability to bounce back is very high. Unlike the 2007 episode of the past crisis where we had recessions causing balance sheet scarring, which took a long time to revive, that is not the case this time around. But nonetheless, as I said, in markets, there are always investing opportunities, whether in bull market or bear market. And today, the main opportunity in our view lies on financial space, where we think the private banks and insurance, these are the space where one should look to buy on every dip. And as and when markets valuations do cheapen out, I think there'll be more opportunities in the broader market as well. But for now, I think these are the space where we would recommend buy on dip, and maybe not so much across the board. I mean, we need to see how situation evolves, per se, honestly, on that front.
But Prateek, internally, you all must have discussed what's happening globally and what the screen is telling us for the last few days. Do you think this global sell-off extends itself? Just talking about the pure near term, what's your own guess?
See, I think it's very difficult to call out the near-term movements. I mean, central banks have been known to be very proactive. Ever since, GFC of 2008, they have been very, very proactive. And I'm sure at such market falls will bring about a reaction from them. But I think what is fundamentally different this time is that underlying growth has really slowed down. And to that extent, the policy response will have to be much stronger. And do keep in mind that if you look at the global growth backdrop, it was only the US where growth was very strong. If you look at China and Europe, growth hasn't really been that great. So I think it's very difficult to call the next week what will happen or tomorrow what will happen. But I think directionally, if growth does cool off, I think that is a bigger concern rather than just rate cuts coming through. I mean, rate cuts are always an help, but I think they do help only once rate cutting cycle is quite deep. In the initial stages, growth concerns dominate the market narratives a lot more, per se.
Just to give you an illustration of we were talking about the yen, right? A friend just messaged, he's also, by the way, in the markets. Yeah, he'd taken his son to Japan. He just returned from Japan for, I think he was getting a black belt. So he was in Japan till last week. He said, when I left India, yen was 160, 154 when I left Japan, 148 last week, and 142 today. So from 160, so I'm quoting with permission, of course, but 160 to 142. So that,
incredible.
I think it's just a very, very large move by any yardstick, right? And how many we don't see these at all. But Prateek, would you agree that it's been the market went up in such a fashion, such an unusually strong fashion. Nothing matters. Like I kept using the word Teflon coated because bulletproof, whatever you want to call it, right? That is not even very strong bull markets behave. I mean, we remember back in the day, you have decent pullbacks along the way and the market keeps going higher, right? Do you think this could be one of that, or are you now starting to say that, well, maybe, we are at some sort of a high level, peak level?
Yeah. See, it's very difficult to call it, ex ante, where we are. But I think if you look at the earnings dynamics and the global growth narrative, it gives me, I feel I would tilt more that, there could be a bit more pain before eventually markets bottom out. It's difficult to call the near-term bottom and whether this pullback will be short-lived, because what is different this time versus the past pullbacks, I think, is the change in global markets narrative. Until now, markets were more concerned when inflation prints used to be higher and when Fed rate cuts used to be priced out. For the first time, despite increased probability of Fed rate cuts, markets are actually falling, which tells you that clearly growth concerns are dominating. And if history is any guide, these concerns are more painful and see a bigger drawdown rather than inflation concerns where you see volatility, but that's very short term. And eventually, once things normalize, markets rebound. Like, for example, what happened in 2023. So I think to that extent, unlike that we have seen in the last 1.5, 2 years, this time around, at least there is a bit more decisive shift in the overall market narrative is what I would say.
Okay, well, Prateek, it was good speaking to you. Thank you so much for joining us. And as they say, right, there's no point catching a falling knife in this market. So perhaps the best thing to do is to wait and watch. The markets generally take the stairs up and the elevator down, and this is pretty much what's happening. It is turning out to be a really tough day for the market. Almost 800 points gone now on the Nifty, something we haven't seen in a long time. But we're here to give you constant updates on the market and how things are going to be shaping up from here. So we'll take a quick commercial break. On that note, on the other side, we'll get you more market veterans, market views, and get you all the stocks that are in the news as well.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become
Well, it really is a manic Monday of trade. The Nifty has breached the 24,000 mark on the downside, and it is over 1,000-point slide. I haven't seen this kind of a sell-off in very long. I think over a year now. In a single trading session, we've seen a fall of over 3,000 points on the Sensex. But it's interesting to point out that I think it was a matter of time before this would have happened, because our market was getting overheated, and there were signs of panic in the global markets as well. With the way, the jobs data, etc. was playing out. And now even Asian markets are selling off quite a bit. Soni Patnaik from JM Financial Services joins in for a quick technical check of the market. Soni, hi. Thank you for joining us. It is tough times indeed. But do you think taking a fresh short position makes sense at this point? Or do you just wait and watch?
Good morning, Sonia. Thank you for having me on the show. So I think you rightly pointed out that never try to catch a falling knife, and it's just wise to wait and watch over here. Nifty has broken 24,000, 23,800, 750 level. It's a good, important, crucial support zone. If there's a chance, it must bounce back. It should do it from these levels. If it breaks, you can see it further testing 23,500, 23,400 odd levels. Similarly, Bank Nifty, it was supposed to test 50,000, 49,500 range as per a short rollover position from July to August. It has tested today, it has already tested. So it's going to be very important to watch if it's able to bounce back from these support zone, or even if it breaks this level, then it can head towards 49,000, 48,200 odd levels. So I think that's the levels to watch out for. It's just wise to wait and watch and stick to stock-specific strategy and stay hedged when it comes to indices.
India VIX is up 60%. It's now approaching levels of 23%. Pull up India VIX, it's a 59.1% increase. More than a 50% increase that you can see in India VIX. Soni, you want to comment on the India VIX? And you said stock-specific is the best way to go about it. So what would the stock calls be?
Definitely. Good morning, Rima. So I think India VIX, it has seen a very significant spike towards 2021 levels, and any move above 16, it was already an indication that the markets could go into a correction. So I think today, tomorrow, anywhere between 2 to 3 days, it is going to be very crucial to watch if India VIX does not cross 23, 24. In that case, every rise will turn into a sell on rise sort of a strategy. So I think that's very important. Only if the VIX cools down from current levels and any move below 16, we can see markets trying to bounce back, may consolidate, may not cause much of a panic. However, if it continues to sustain above 16 or 18 levels, then you can see the panic continuing, the volatility is here to remain, and uncertainty will definitely rise. So coming to this stock-specific strategy, it will be a balanced approach, a buy and a sell idea. The first sell idea comes in Crompton today. One can sell in Crompton futures at current level, keeping a stop loss of 440 and a target of 415 and 410 can be taken. As Crompton breaks 10 and 20 EMA on daily charts today, giving a fresh breakdown. The buy idea is a conditional buy over here for Lalpath Lab. The condition is to consider a buy only above 3,100, 3,120 range. So Lalpath Lab is consolidating with fresh long positions on a positional basis. More than 10 days, it has been adding up fresh long positions. It is at a multi-year breakout as well. However, it is consolidating at this level. So the condition is to buy above 3,120, keeping a stop loss of 3,000 and a target of 3,250 can be seen. So that would be the conditional buy.
Thank you very much for that. By the way, we spoke about India VIX up 50%. Japan's VIX is up more than 100%. After that, market is down close to about 14%. But let's get to corporate earnings. Lots of news flow on that front. Bank of India reported their Q1 numbers. They've seen a 9.7% increase in the deposits. Net profits up also 9.8%. Rajneesh Karnatak, MD and CEO of the company, the bank, is now with us on the show. Sir, thank you very much for joining in. First, can you explain the improvement that we've seen in your net interest margins in the current quarter, and what can you guide going ahead? What explains the NIM improvement?
Yeah, thank you so much. If you see our NIM, it has registered a NIM. We have registered a NIM of 3.07% for June 24. This has sequentially improved. Actually, in June 23, it was much lower at 3.03, and in the March, it was 2.92. So NIM has improved. It is at the backdrop of our yield on advances, which has now touched 8.60%, an improvement of nearly 50 basis points. And cost of deposit is 4.82. So there is a gap of around 3.68% as far as between the cost of deposit and the yield on advances. This gap is also helping us in improving our net interest margins, which is now at 3.07%. As regards the guidance is concerned, considering the challenges which are there overall on the resources side and the cost of deposit which is rising, so we are giving a guidance of for March 25 a NIM of shade below 3%.
Okay. All right, got that. In terms of growth, right, loan growth, what are we looking at? Because I was going through your numbers in Q1, the NII growth has been about 6% quarter on quarter. Even year on year, it's a 6% growth that you're seeing on NII. Just asking you about overall loan growth for the full year, FY25. What are we looking at? And if you can break it up for us between corporate loan growth, retail, agri, MSME, where are you seeing revival coming from?
Yeah, so as regarding the credit growth is concerned, see, we have given a credit growth of around 17% on the domestic book, and overall in the global book, the credit growth is around 15%. For the guidance sake, considering the overall scenario, we are giving a guidance of around 13 to 14% on the global credit growth side. And as far as the mix is concerned, see, the mix will remain the same at around 55% will be our RAM book and 45% will be the corporate credit book. Within the corporate credit book also we are going for infra lending, industrial sector growth, and also on the renewable energy side. So these are the sectors where there would be growth. As we speak, there is a healthy credit pipeline with us of around 40 to 45,000 crores as we are speaking. So, and RAM also there is a healthy credit pipeline over there. Growth also has been good as far as the RAM is concerned. Agriculture has grown by 22%, MSME has grown by 13%, and retail has grown by 20%. Overall, RAM has grown by nearly 20%. So we are confident that the credit growth which we are targeting at around 13 to 14% on the global side will be able to achieve for FY25.
Any concerns on the asset quality? I can see your gross NPAs, net NPAs have actually improved. But some of the other banks or in the industry, there is concern about unsecured lending. What can you guide on asset quality and what is happening on the ground?
Yeah, as regards asset quality is concerned, if you see from our data, so gross NPA has come down in both in absolute numbers to 27,000 crores and in percentage terms to 4.62%. And it's a guided path which we are giving, and it is coming down on a sequential basis also. In fact, it has gross NPA has come down by nearly 2 percentage points on a YOY basis. As regards net NPA is concerned, for the first time we have come down below the 1% level. We are at 0.99% in June 24, which was more than 1% as on June 23. So there also we have shown improvement, and recovery also, if I tell you as far as the bank is concerned, 1900 crore was the slippage in Q1 for the entire year for this quarter, in fact, and the recovery that we have made is around 2700 crores, which includes cash recovery, which includes recovery from written off accounts also, and also recovery from the upgradation which has happened. So if we include the written off accounts also, so then this total recovery will be around 4,000 crores. So if you remove that, it is 2,700 as against flash slippage of only 1,900 crores. So 1.42 is the slippage to recovery ratio now with the bank. So that also is improving on a sequential basis and on a quarter-on-quarter basis. As regards stress in the unsecured book is concerned, not much of stress is there. Our unsecured book, as far as the personal loan segment is concerned, we have a book of only 10,000 crore. That book also is mostly for the salaried class. In salaried class, majority of our loan book is for those accounts where the salary is coming with Bank of India and the credit score in that is around 700 plus in the CIC number. So that also guardrails we have put. With all these guardrails, we don't see much of a stress over there. And as far as the NPA book on the this personal loan segment is concerned, only 40 to 45 crore I think is the NPA in this personal loan book. So we don't see much of a concern as far as the unsecured book for Bank of India is concerned.
So would you have a number in mind, the gross NPAs by the end of FY25 and net NPAs, what are you looking at?
Yeah, so 4.62 is the gross NPA which we have touched now. So we would be giving a guidance of around 4% of gross NPA. And as regards net NPA is concerned, so we will continue to improve this net NPA which we have reached at 0.99%. And we should be at around 0.90 by March 25.
Thank you very much, sir, for joining in. That's Bank of India, and the sell-off continues. There is no buying in sight right now. More than 3% gone on the benchmark indices, and Japanese markets have closed, and it's the worst day on record for them since 1987. We will get into a very short break. We'll come back and keep talking about this mayhem that we are seeing this Monday morning.
Expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV 18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV 18 and CNBCTV18.com. CNBC TV 18's most comprehensive.
Welcome back. Talking about earnings, which are expected today, the big one will be Bharti Airtel, and then you also have ONGC. But outside of that, many mid-caps, important ones, will be reporting numbers. You've got Marico, for instance, Bharti Hexacom. But let's talk about Bharti Airtel. Now, you know, Bharti's this quarter numbers assume less importance, because if you remember, the price hike, which was affected by the telecom majors, will be effective only in Q2. So in Q2 is when you will see the big jump in the company's revenues, margins, and in terms of the ARPUs. For this quarter, we are working with a consolidated revenue growth of close to about 2.5%. Airtel Africa has already reported numbers. So we will focus on the India business, and the India mobile revenue is seen up close to about 3%. The India margins are also seen largely stable at 55%. The driver for the company will be some subscriber adds. So according to our poll, subscriber addition should be close to about 3 million on a quarter-on-quarter basis, while the ARPU is likely to inch up a little bit from 209 to 212. But the big jump in the company's ARPUs will only come in the subsequent quarter when that 15% tariff hike comes into effect. So Q2, Q3 will be big quarters for the company in terms of the India margin improvement and the ARPU. But this is a number you should watch. Typically comes out at closer to about 4:30 p.m. Look at the US futures extending the sell-off now. Nasdaq futures is down 6%. The S&P 500 futures is down 3%. So it's
not looking good at all. In fact, it looks like it's only going to get worse through the course of the day. And in terms of individual stocks, right, everything that has rallied in the last maybe 6 months or so is coming off quite sharply, whether it's Tata Motors, which is down 6%, Infosys is down 5.5%, Tech Mahindra is down 6%.
But you know, these are also stocks which are indexed to global growth. So Tata Motors, for instance, or any of the IT names. So stocks where there are linkages. So metals are under pressure quite a bit. Pull up the Nifty Metal Index. That's where you are seeing, you know, the biggest cuts, stocks indexed to global growth.
Absolutely. Even something like a Samvardhan Motherson, right? I mean, it has a large exposure to the global markets, and hence the stock is down almost 10% right now. We see this play out every time the market sells off globally, that a lot of these stocks get under pressure. Let's do one thing. Let's take a short commercial break. We'll get on you more on the markets on the other side. Don't go anywhere.
Award-winning news show India Business Hour drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV 18. Now streaming live 24/7 on YouTube.
Welcome back to Trading Hour. I'm afraid there is no respite to this market fall. At this point in time, there is still a fall of almost 700 points on the Nifty. The Sensex is down over 2,000 points, I think 2,400 points at the moment. But really, the fall pales in comparison to the fall that we're seeing in global markets. So the Taiwanese market has plunged almost 8.5%. The Japanese market has seen a fall of over 4,000 points in a single trading session, exceeding all its previous recorded daily decline. So in that sense, our market is not so bad. It's been resilient. It has arrested its sell-off up until now. But yes, it's really a global mayhem that we're seeing right now. But Divi's Laboratories is one stock that we're looking at. The pharma company shares have dipped almost 2% on the back of its first quarter earnings. Ekta is here to give us a breakdown of the numbers. Ekta, over to you.
Well, the numbers were a tad below what the street was anticipating. So the revenue was up around 19%. Street was anticipating over 20% growth. Margins 29.4% versus estimates of 30%. Profit 430 odd crores versus estimates of 486 odd crores. but that was also because of higher tax expenses this quarter. However, the commentary from the company was positive this time. They say that they're seeing opportunities from the Biosecure Act. They're seeing opportunities from phase 2, phase 3 molecules. They are positive on the GLP-1 drug opportunity as well. And the management has maintained their growth guidance of double digits for FY25. Brokerages, Nuvama has upgraded the stock to buy. They are building on a revenue and profit CAGR of 20% and 31% respectively over FY24 to FY27. Jefferies has a whole target price of 4,830. They say Q1 was ahead of estimates. The management provided bullish commentary on custom synthesis and increased workflow on peptides. Antique maintains its sell with a target price of 3,264. They believe margin risks remain due to the upcoming patent cliff and ongoing price erosion in the CDMO business. PE-wise, it's expensive, so that's probably why you're seeing this shave-off take place as well. It's over 60 times FY25, over 50 times FY26, and over 46 times FY27 PE.
Okay, thank you very much for that. There's lots of important economic data coming out of the US later, today. You've got the ISM services data from US. Tuesday, you've got the trade deficit. So after the disappointing number that we got on the non-farm payroll data on Friday, the street will track the macro data very, very closely. Get into a break. We'll come back with more on the markets.
भूंतर पार्वती और जिया संगम पे है, जहाँ पर आप देखते हैं कि ये जो रौद्र रूप व्यास और पार्वती नदी का यहाँ पर उफान पर है। हालांकि अब जो है थोड़ा सा पानी कम हुआ है, लेकिन यहाँ पर जो व्यास पार्वती नदी के किनारे जो ये भवन था, निर्माणाधीन भवन है, उसको जो है भारी नुकसान पहुँचा है। जहाँ पर आप देखते हैं कि ये जो भवन का एक तरफ का हिस्सा जो है वो पूरी तरह से क्षतिग्रस्त हो गया है और इस पूरे भवन को जो है नुकसान इससे पहुँचा है। इसके साथ साथ आप देखते हैं कि यहाँ पर जो है भूंतर के पास जिस तरह से यहाँ पर सुबह के समय जो ये बाढ़ का जो मलबा और जो गाद है वो यहाँ पर सड़क तक पहुँच गया था, जहाँ पर सड़कों में आप देखते हैं कि यहाँ पर भी मिट्टी और गाद जो है पूरी तरह से भर गई है। और सुबह के समय यहाँ पर बड़ी संख्या में जिस तरह से लोग जो है यहाँ से प्रशासन की तरफ से लोगों को अलर्ट किया गया था कि लोग जो है वो अपने सुरक्षित जगह पर जाए, क्योंकि जिस तरह से मलाना डैम जो फटने के बाद पार्वती नदी में जो रौद्र रूप था, जिस तरह से भारी बाढ़ जो है यहाँ स्थिति यहाँ पर उत्पन्न हुई थी, चाहे वो जिया गाँव की बात करें या फिर भूंतर के आसपास की बात करें, तो इस सड़क तक जो है पानी बह गया था। आप देखते हैं कि यहाँ पर भी जो है मिट्टी और गाद भरी पड़ी है।
We've always grown ahead of the market, Rima. And when the market was growing at 30% 2-3 years ago, we were growing at 50%. And last year, when the market, we feel, grew probably like high single digits or low double digits, we were higher than that also. But at the same time, I think it is important to note that this is a business which has very high operating leverage. So even though that the revenues grew 15%, the PAT doubled in a year. And that demonstrates the strength of the product and the high margin nature of the business. So even going forward, we anticipate that as revenues grow, the profit should grow almost disproportionately with revenue growth.
So to your mind, what are the
Okay, let's give the market check a break and cut across to Indigo's anniversary event. The company is celebrating 18th year of flying and is also going to be talking about entering the business class space, which investors promise could be, a big positive for the stock as well. So let's listen in to what the management has to say.
I want to assure the world that under the able leadership of Peter Elbers and his senior management, the employees at Indigo won't rest till we have made our humble contribution in ensuring that India has its rightful seat at the table of global aviation. Thank you, and I wish you all an enjoyable session previewing Indigo's new initiatives. Thank you, Peter.
Thank you. Rahul, thank you. And what a simple way of saying it. Affordable fares, clean aircraft, and on-time performance. But how difficult to do it, Rahul? Thank you.
Thank you.
That is Interglobe Aviation. I think they're celebrating 18 years of flying, and they're also going to be soon ditching their one-size-fits-all sort of model. They're going to have a premium class with roomier seats by the end of this year, entering into the business class space as well. That is something that is the big focus area for them and could help improve their profitability as well, as per what analysts have said. All right, let's move on now. The other stock to look at is SBI. It's been reacting to its Q1 earnings. In a conversation with CNBC TV 18, SBI Chairman Dinesh Khara commented on how the bank is positioned to move its yields forward and also commented on the impact of LCR on the lender. Listen in.
I hope that we should be in a position because whatever increase in deposit rates have also happened, even our MCLRs have also gone up of late, and we will be in a position to have the better yield on advances. Our yield on advances have already moved to about 8.86%, and we should be in a position to improve our yield on advances going forward. So that is something which will help us in ensuring that our NIM, we should be in a position to protect around these levels. We are having a pipeline is about 4.76 trillion, and it is equally split between proposals in pipeline and also proposals which have been sanctioned but awaiting disbursement. So I expect that, of course, when it comes to these corporate proposals, the disbursement takes some time. It does not happen immediately. But yes, of course, a significant portion of that, at least part of it, will be availed. This is what we expect. So I think I expect that we should be in a position to maintain our earlier guidance of about 14 to 16% kind of a growth and more towards 15% kind of a growth.
Operating margins.
Most SaaS companies in this space tend to operate around 25-30% margins at steady EBITDA margins at steady state. We do anticipate at some point we'll also get there. However, it is important that we are taking a cue from your earlier question to Kapil. We are still in the very early days of e-commerce in India. I remember 10 years ago when I started my journey in e-commerce, people used to say nobody will buy anything online. Then they started buying phones. Then they said, oh, but they will not buy apparel online because the fit is important. Then people started buying apparel. Then they said, but they will not buy shoes for sure. And then people started buying shoes, and then beauty, and then pharmacy products, and then even grocery and food, everything. So we have always been surprised about how much growth there is left in e-commerce in India. And hence, given Unicommerce is essentially an index to the e-commerce growth in the market, whereas shipments of e-commerce grow in India, e-commerce volumes will also grow, and Unicommerce volumes will also grow, and Unicommerce revenues will also grow, and by corollary, Unicommerce profit should also grow.
Well, stock of the day and stock of the last couple of years. What's interesting is that Zomato has moved around 40 rupees in today's trading session to zoom to a record high. And it's a far way off from July 2022 when the stock itself was 40 rupees. So 278 was today's high on the stock itself. A massive 7 times move since its decline to a low of 40. What has actually done well for Zomato over the last few years? One, there has been improvement in food delivery and their operating metrics itself. Secondly, most importantly, the strong growth that we've seen in Blinkit along with operational improvement and the management guiding for further growth out there as well. Third, improvement in market share versus Swiggy over the last couple of years. We've had data telling you that Zomato has actually gained a lot more market share than Swiggy. And fourth, finally, they've been seeding new verticals of growth as well. So let's take a look at each of them in itself. First, improvement in the food delivery business. The benefit of operating leverage really kicking in. First quarter FY24, the food delivery EBITDA was close to around 181 crores, with platform fees being introduced and a lot of other cost-cutting measures that the company has taken with revenue growth. Food delivery EBITDA zoomed all the way up to close to around 300 plus crores. Blinkit as well. It's grown at a compounded rate of over 100% on a gross order value basis. And despite this expansion and the investment in the expansion, the EBITDA on Blinkit is actually just minus 3 crores as against, about 133 crores what it was same time last year. So that's a positive. And finally, we're talking about Blinkit taking market share away from e-commerce deliveries and products like tech gadgets, sports, etc. on the platforms too. With all of this, the cash on their books also has jumped by about 1,000 crores in the last 4 quarters. What this has done is that the company's had an annualized profitability of close to around 1,200 crores, and Blinkit itself is valued at 20 times more than what Zomato paid for it in 2022. So that really has been the growth driver, as Deepinder Goyal had earlier said that Blinkit would drive more value for shareholders in the next 10 years than Zomato, and now they've gone ahead and revised the guidance to 1,000 stores by March 2025 to 2,000 by 2026 with profitability as well. Additionally, now the street is very excited about the prospects in their going out business. The company says the use case in the going out business has increased to movies, sports ticketing, live performance, shopping, staycations, etc. And their new app, which is District, will cater to this going out business. A claim by the management suggests that going out will be the third largest B2C business emerging out of Zomato. Remember, the company has earlier confirmed being in talks with Paytm to buy their ticketing business. So this is something that the street will be eyeing, especially given the sort of rise that we've seen on Blinkit itself. And brokerages understandably have increased their estimates and targets.
Rising concerns over a possible US recession, a possible mid-meet Fed rate cut, and the Japan carry trade all combined to spook equity, currency, bond and commodity markets.
Britannia clocks in healthy volume growth and sees a good pickup in rural consumption, modern trade and e-commerce, but rising commodity prices hurt margins. FMCG stocks gain on expectation of higher consumption and flight to safety.
SBI Chairman Dinesh Khara remains upbeat on growth and credit quality even as deposit growth slows, but analysts fret over crimping margins and rising stress going ahead.
Warren Buffett's Berkshire Hathaway likely sold almost half its stake in Apple for over $84 billion, boosting its cash pile to nearly $280 billion. This is being read as a strong signal of frothy valuations.
Hello and welcome to a halftime report. I'm Ekta Batra and with me is Mangalam Malu. Well, it is definitely a red screen as you can see on the top and has been from the get-go. We knew this was coming considering that the US jobs report on Friday was definitely below estimates sparking concerns that yes, the US is possibly heading towards a recession. And you got the verdict from the Asian markets today as well, with the kind of carnage we've seen across Asia, such as the Japanese markets, which would be a case in point. And so we're not spared either. We have an advanced decline ratio, which is extremely weak, which currently stands at almost 1:6. For the Bombay Stock Exchange, the India VIX has spiked up, and we have all of the stocks within even the Nifty space, most of them trading in the red.
All Nifty sectoral indices in the red, Ekta. And as they say, you know, the old adage, when US sneezes, everyone else catches a cold. Fears of US recessions, hefty valuations in India. At the same time, you had, you know, a lot of global tensions in West Asia, etc. as well, notwithstanding all those concerns. And it also came back from the weakness that we saw in big tech earnings. I mean, on Friday, irrespective of recession fears, etc., Intel was down 26% on growth guidance cut and lower than expected, you know, jobs, etc. as well. We saw a big cut in all the other names. As we speak, the futures, Nvidia is down almost 5-6% after falling about 8% in the last couple of trading sessions. So there is a big sell-off that we are seeing. The Nifty, as you can see at the top of your screen, you know, around that 24,000 mark. If you look at the big cuts that we're seeing in the market itself, the Nifty down 700 points, the big headline, so to say, the Nifty Bank down 1,400 points, and the Sensex down 2,400 points as well. Spoke about the broader markets. Look at, you know, the number of stocks which are declining, 2,260, which compares with just about 150 stocks which are advancing, all sectoral indices in the red. And what's interesting is that 500 stocks on the Bombay Stock Exchange are at lower circuit right now. So 500 stocks, there is no exit door right now. The narrow door to exit has actually been closed. So 500 BSE stocks at lower circuit. You have 230 stocks on the upper circuit. But remember, no Group A or Group B stock is in upper circuit. So the ones which are in upper circuit actually have their own, you know, limited traders, etc. as well. So those are a bunch of things that we're looking at. As you can see, the headlines numbers, the Nifty down 700, the Sensex down 2,400, the Nifty Bank down 1,400. What really stands out is the India VIX up 50% in today's trading session. And that's the biggest intraday spike that we've seen in the India VIX all the way since 2015. And since 2015 from now, we've seen a lot of volatility, including the COVID day and a couple of lower circuits as well. But a 50% spike after almost, 20% spike that we saw in the previous couple of trading sessions as well.
Yes, absolutely. And like you mentioned, you know, the statistics today are actually quite concerning. And all of the corrections that we've seen in the past, may it be even the election day correction, that was more local in nature. Today, we're facing what is a fear of a recession, which is probably going to seep across the globe and probably come down to the Indian markets in some form or manner, though we might be more resilient, which could probably be, you know, showcased in the FMCG stocks today. So that's probably more indicative or more worrisome in terms of what is taking place in terms of a larger trend. But nonetheless, like you mentioned, the BSE is indicating that 511 stocks are currently in lower circuit, 237 stocks in upper circuit. As of now, we have around 57 stocks which are at fresh 52-week lows in today's trading session, 3,400 stocks which are declining on the Bombay Stock Exchange, 548 stocks advancing as of now. So that's the kind of setup that we have. But Mangalam, what is the F&O space telling you?
You know, if you look at the top losers today, they are in three buckets. The first one are anything that have global exposure. So you have, you know, names like Tata Motors, Infosys, the IT stocks, Hindalco, commodity and global plays, all of them lower. ONGC as well. Oil is at close to around $76 per barrel. So those are a bunch of stocks which are lower. Then the other bucket of losers are the ones which had already seen a big rally. So you have your GMR Airports, NCC, LIC Housing, all of them lower as well. And then you have a bunch of these, cash stocks which are lower. Mazagon Dock, Cochin Shipyard, Titagarh, RVNL, Texmaco, all these sort of rail stocks which are lower too. Flight to safety is in names like HUL, Tata Consumer, Marico, Dabur. So you have all those, you know, fresh shots that we're seeing in the system. Samvardhana Motherson down almost 10%, SBI down almost 5% as well. What are the triggers to track from here? Commentary coming in from the Fed. If there is a mid policy meeting for the Fed to cut rates, largely because in one day, the probability of a September rate cut has increased from 22% to 58%. And then we have our own RBI policy outcome on Thursday itself. So does the RBI do something ahead of what the Fed is doing, taking note of what the global markets are saying as well? And to that extent, the Nifty 24,000 mark is extremely crucial. Remember, the reason why it's holding on to that 24,000 mark yet is because there is a fair amount of put writing at that level. The highest amount of put writing is at the 24,000 put. So that's the mark that should come up for you. We are seeing some short covering out there. So 23,750 remains an important support to watch out for, and I'll tell you more about why. And 24,000 call is actually seeing a lot more writing now that we've broken below that. So 24,250 thereabouts on the way up would be a difficult level to cross as well. The Nifty Bank as well, it broke below the 50,000 mark. You know, it's a lot of action at the 50,000 put and the 50,000 call itself. Why is 23,750, 23,800 important for the Nifty? Because the Nifty is below the 20-day moving average. The 50-day moving average comes in at 23,840. And for the Nifty Bank is below the 50,000 mark, and it's below both the 20 and the 50-day moving average. For the Nifty Bank, the important level to watch out for now will be the 100-day moving average, which is 49,450. So the Nifty, it's 23,840, below 24,000 as an important level. And for the Nifty Bank, it is 49,500 thereabouts, which is the 100-day moving average. So those are a bunch of levels that we'll watch out for.
Okay, and we're talking about the equity markets, but we should just keep an eye out on the rupee as well, because the rupee has hit a record low today. It's approaching towards 84 versus the dollar. So I think that would be an important mark to watch out for the currency market for the rupee. So maybe that should come up for you. Currently at around 83.83. Let's see where it stabilizes at this point in time. 84, some way away, but nonetheless, record low currently for the rupee. But let's talk a little more about opinion that we're getting with regards to the equity market. Chris Wood of Jefferies says that the moment that greed and fear has been waiting for, what seems like an eternity, finally arrived on Friday. That is, he says, unambiguous evidence of a weakening in the US labor market at a time when inflation is still above the Fed Reserve's 2% target. He adds the reaction of the money markets shows that investors share greed and fear's long-standing view that the Fed, in event of such an outcome, will prioritize the labor market over inflation. He says money markets are now discounting 116 basis points of easing by the end of this year, whereas before the payroll data, it was only 86 basis points. He adds an intra-meeting cut, the first since March of 2020, now looks likely. Okay, well, that could be something that I think would probably assuage a lot of the concerns of the market, that if in case the Fed does meet on an intra-policy basis, I think that would be important. Like you mentioned, the RBI is meeting from the 6th to the 8th, but they've indicated very clearly they don't follow the Fed. They're going to follow what is right for the Indian economy, and they're not really going to follow what the Fed does.
Central bankers globally, there are three ways of operating when it comes to all these situations. The first, gun in their arsenal is that of commentary. So are they actually going to do any sort of commentary to assuage market concerns or not would be definitely one of the things to watch out for. And that's easier said than, going ahead and cutting rates, etc. as well. The second arsenal, when they move to level 2, are open market operations. What are they doing in the markets? Are they looking at, buying some bonds, or at the same time stabilizing the yields, etc.? So commentary doesn't work, then open market operations. And if open market operations don't work, the third, the most important gun in their arsenal has to be that of rates. So now if that's looking likely, that implies that the top two perhaps may not be working, which is why we're seeing the US Treasury yields fall from about 4.2 in the previous week to 3.79.
Okay, well, let's see. As of now, it's, 1 day of a steep correction that we've seen, at least for the Indian markets. Let's see what the global trajectory is and what the next couple of days will actually bring forth as well in terms of data. We have the ISM data from the US as well. And I think every piece of data from the US will now be tracked very closely to assess and corroborate on where the US economy is headed now. But we'll take a short break. Up next, we'll be connecting with Deepak Jasani of HDFC Securities as the market fall intensifies. Stay tuned.
My wife, for instance, and she's been such a big contributor in what I've become eventually. I think some of the soft skills actually, and these are aspects, and the ability to without getting sort of stressed, being able to manage many different things. I'll just give you one example. When I was a CA, typically, and many of the advisors, the Indian Economic Service actually are women. they would be in a meeting with me maybe at 3:30, 4 or some, and they'd get these calls actually, and they would be, because they're in a meeting with me, they would be, declining those calls. If the call comes twice or thrice, I knew this was actually either their kid or their mates calling basically for what needs to be made for dinner.
Yeah.
And so because that's exactly what, my wife, so when I was at ISB, it's the rare occasions when she was not instructing our kids or the maid to actually say what needs to be cooked. My kids would call me up. I would be at a loss actually.
Believe in your strength, right? What is your strength? Carry that, right? It is your deep technical knowledge, your perspective, because that's where the new ideas generate, right? So keep focusing on that. That is one thing that will give you a purpose. Second thing is networking, right? Network with people whom you come across, building the network where you can share your ideas, express them, thrash them out. That is one thing which is going to be very, very helpful as you go ahead. Third thing, I will have to say that keep learning, right? Our industry is about change. It's just a lot of innovation every day. Even actually, sometimes it is impossible to catch up with everything. So keep learning. Wherever is an opportunity, learn it, right? And the last but not least, resilience, right? Don't get disheartened by a failure, right? Failures will happen. Learn from it.
One particular moment, so I actually come from a very humble background. My father lost his father when he was just 7 years old, and just completed school. I was the first person in my, clan to go to university. So when he first came to campus, and I took him to the library, the Vijay Kelkar library there. I remember him actually being very emotional and saying, at least in my next life, I get the opportunity to study in a university like this. So that moment is something which is etched in my memory. I'll be absolutely honest, I did not even know what a chief economic advisor is at that time. If somebody said I'll be X, Y, or Z, or even executive director, I don't think even I knew what the International Monetary Fund was.
Welcome back. No respite for the markets, holding above that 24,000 mark, but it's down almost 700 points. And it's not just the equities market. We're seeing a lot of other assets also seeing a bit of a sell-off. As our ticker team is telling us, the crypto universe has also seen a big sharp sell-off. Nearly $70 billion eroded in wealth, and it's turned negative for the year for major cryptocurrencies too. So the only thing which rises when the market falls is the correlation between all assets. All of them are, seeing a sharp sell-off itself. Typically, these sell-offs are, in hindsight, used as or said to be big buying opportunities. So are they buying opportunities now or not? Deepak Jasani, the head research of HDFC Securities, joins in now. Deepak, when the market wasn't falling, a lot of people were saying valuations are frothy. We will wait for corrections to go ahead and buy. Now we're seeing a big cut in a lot of these names which have seen a big rally, be it these defense names, rail names, a couple of these infra names, and a lot of IT names where people would have missed the recent rally that took place as well. What are you suggesting to your clients? Do you see further downsides from here, stay on the sidelines, or maybe start dipping into this big decline that we've seen in our markets?
Yeah, good afternoon, and thanks for having me. Mangalam, currently we are seeing a combination of economic troubles and geopolitical issues, which has not happened for some time now in the markets. A lot, as you must be aware, markets are driven by sentiments, and now how far the sentiments are punctured due to this and how much time will it take for this to get repaired, we'll have to watch out. We'll have to closely monitor that. Having said that, I think the sell-off temporarily seems to have come to some sort of a bottom, near-term bottom. Nikkei at about 30,500 and US dollar USD JPY level of about 140.5. These two levels are supports. So we think in the near term, we could see a small bounce from here, but with traders could take advantage of that bounce. Investors, on the other hand, will have to see as to how far the bounce goes from here and how fast is the bounce. So in case the bounce is very labored, then probably it would mean we will form a lower top. So in that sense, I think investors should lighten up even now and in the forthcoming bounce. Buying the dip has always worked in the past. We have seen from June 22 or from March 23, markets haven't seen a very big correction, and every dips have been taken advantage of. So this time around, I think it would be wiser to hold back a little before jumping in the buy on dips kind of a strategy.
Okay, so just to get it clear, Deepak, today if somebody wants to deploy money into the markets, you tell them to hold off and probably assess what's going to take place with the global markets.
Right. Because the geopolitical developments are also not yet over for the time being. So every bounce may be sort of taken advantage of from now onwards. So one will have to let the market settle down. Unless the bounce is very sharp, I think they will get sold into.
Okay.
What sectors would you look at putting money in right now? Because, you know, the ones which are doing well are the ones that typically do well during flights to safety, which is the FMCG space, which is mildly higher right now after a spate of underperformance in the past as well. We've seen, you know, some of the pharmaceutical names also see some buying. Would you buy the ones which are doing well right now because they haven't done well in the past? Or would you look at buying, you know, themes which are seeing some profit taking like defense, rail, infra, all of them, which have structural levers but are extremely expensive?
So we would stick to the traditional defensive for the time being, the FMCGs and the pharma. I think IT, there may be some more downside in case the slowdown gets accentuated globally.
Okay. Well, you know, I just want to extend that point, Deepak, because one of the queries that we get from a lot of retail investors is what they should do with a lot of these PSU or PSE stocks that they have invested in and which they're sitting on very good gains with. For example, the Nifty PSE index itself, as we all know, has outperformed. It's up 41% this year itself. But is it prudent to probably just take some money off the table now for somebody who's probably sitting on a good amount of profits, one? And two, would you probably look to re-enter these stocks or enter these stocks at these levels?
Yeah, so as I said earlier, I think it may be a good idea to sell even now and also in bounces, except for in case you are forced to remain invested in equities. So in that case, I think you can shift gradually to the defensives, but otherwise the sectors or stocks which have seen heightened interest from the retailers and HNIs over the last few quarters, I think will continue to come under pressure. And it may be a good idea to take profits off and sit on cash for some time.
Sit on cash for some time. How much cash do you think one should sit on, say, because mutual funds are sitting on closer to 7 to 8%, at sometimes even 9%. Some of the PMSs are sitting on 20, 25%, etc. What proportion of cash do you think should be good? And should one also look at gold as an asset class right now, given the sort of uncertainty that we're facing globally, despite the rally that we've seen in gold?
So gold allocation, we have always been advocating 5 to 10% of your financial assets should go into gold. And that stays even now, because in an uncertain world, I think gold can at least save your capital, if not give you appreciation. Now, as far as cash levels are concerned, I think unless you are forced by regulations or by compulsions to beat the benchmark, you have the flexibility to go even 40-50% into cash. This is basically for retailers and HNIs. Mutual funds and PMSs have the other two compulsions, so they may not be able to raise capital to that an extent.
Right, just a correction, Ekta. You know, we were saying crypto has lost $70 billion in value. It's actually $270 billion. Our ticker team just alerts us $270 billion in value lost in alternate assets as well.
Yes, absolutely. And that's exactly why gold has become this topic of discussion as well. But Deepak, just wanted your thoughts in terms of the entire IT space now. How would you approach it, considering that there are these gyrations of, negativity which is coming out from big tech? In that context, how would you approach a couple of these IT firms?
So, in IT, I think the visibility of large contracts or TCVs, as it were, may still be lacking for the next 1 or 2 quarters. So, in that sense, they may optically look cheap compared to the past valuations, but their growth rates have also come down. So, I think IT stocks are typically they are trading plays. So in extreme sell-off, you get into them, ride the 10 to 15% up move and get out unless there is a sustainable improvement in the visibility of order flows.
Final question then, what about valuations? I mean, at 25,000, Nifty was closer to 22 times 1 year forward earnings. And now we have nearly 86% of the Nifty weight having reported earnings. So far, it's been a little bit of a mix because we saw earnings downgrades of nearly 1.2% of the Nifty so far for this year and almost 1% for the next year as well. On a valuation check, what have you made of these earnings that have come so far, and what looks good post that and what doesn't?
So as far as the valuations are concerned, I think there are key issues to be monitored. One is the final outcome of the monsoon, its spread and intensity once it finishes. We have seen pockets of excessive monsoon and shortage of monsoon in the different areas of the country. So ultimately, by the time end of September, how does the monsoon sort of exit? That will have to be monitored very closely. Q1 numbers, the balanced numbers, I think we will have to see. As you mentioned, it has been a mixed bag. There is struggle on the top line and also margins for quite a few companies. Asset quality seems to have come under pressure after 3 or 4 quarters. So those are the worrying signals. There is a US presidential election in November and there are state elections in October in India. So those things will have to be monitored. Now, valuation-wise, I think we will have to, in case the sentiment remains shaken or poor, despite good earnings expectations, the valuation can slide down. And analysts will, at that point of time, rush to sort of downward project the estimates. Right. So, in that sense, I think valuations will become attractive only when we are closer to 17, 18 or maybe 18 and a half times earnings.
Okay. All right, Deepak, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's the view coming in terms of the markets. Just want to point out that a lot of the stocks, say, for example, the M&Ms, which have already given returns of around 54%, ONGC, which is up 51% this year, BPCL also, which is up around 50-odd%. All of them are down anywhere between 2 to 6-odd%. 6-odd% for ONGC at this point. It's the top loser on the Nifty. So sharp cuts coming through there. We'll take a break, but we'll continue with our coverage on the markets. We'll be talking technicals. Manish Hathiramani of Deen Dayal Investments will join in with some trading calls. Stay tuned.
I came here in 1991. 1991, that was my first year of college. I came here for inter-IIT. So I remember this campus especially because this is one thing that I think especially the women need to hear. So I was, good in table tennis, but I became the captain because my captain dropped out. And I came here and we were playing and I won the first game. And then all the men started booing me.
Are you serious?
Yeah. And so I realized the power of mind, right? Like, I was better than the player that I played against, but I lost. And I think that was my first lesson that I learned, which is that, you might be better, but sometimes, your circumstances make you believe you're not, and therefore you lose. So I think that's one thing that everybody needs to do. And I think coming back to this campus.
We have to correct that. We have to give it a big round of applause now to make up for what happened in the past.
Yeah, but my coach also gave me gajar ka halwa, so it was okay.
Today, she is the director for the mission that actually saw India's first private rocket being launched. So tell us a little bit more about that, Saranya. And what, you did that all under 30?
They gave me an opportunity to be the vehicle director for the mission. So it was a huge learning for me to build. We started off the company by at least when I went in, I didn't know anything about the rocket building. So to building a vehicle which can actually fly, it was amazing.
Not just actually fly, it's actually flown.
Yeah.
So congratulations to you and to the entire team at Agnikul. You know, I know for many of the students here in the room, you're a role model, but you talked about Naveen being the initial role model for you when you got started. But let me end by asking you, who do you look up to today? Which are the companies that you respect and admire? And, you know, is there anyone in specific that you would like to emulate in your style of working?
The one individual that I have... I wouldn't say seen in very close quarters, but seen from some distance as part of my work in CII, but I truly admire is Mr. Uday Kotak. I think he has built a franchise in a bank that is truly outstanding. And to do it in one generation, and the quality of talent and the kind of ownership that talent takes is remarkable.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. The CNBC TV 18 coverage of the Union Budget starts right now.
Hello and welcome to CNBC TV 18 Motilal Oswal Budget Headquarters.
Welcome back. Well, we do have Manish Hathiramani of Deen Dayal Investments joining in on the show to discuss the technicals now. Manish, hi, welcome to the show. Well, tough day. It's all in the red right now. But what would your approach be? Do you think that maybe a buy on dips would be prudent?
Good afternoon, Ekta. Not so soon for sure. Not because I feel that all hell has broken loose, but because we have triggered that level of 24050. Which was the lows around the budget day. While we are trying our best to maintain that, we are still trading below that. Should we close below this 25050 level? I think the chartical terms for the short term becomes bearish. A break of today's current low also can take the Nifty down further. I would be working with levels closer to 23,300.
All right, 23,300. If it does not cross past that budget day high today, that's quite a call, Manish. Typically, you do give big calls. Individual stocks, what is it that one should do then? Because, you know, we are seeing a sharp sell-off in a lot of these names, which had seen a rally and some flight to safety in FMCG and pharma. How are you positioning yourself on stocks?
Well, I think if Nifty does break this 24050 on a closing basis, maybe a few minutes before that, I would be looking at two sell calls, namely TCS and ONGC. TCS would be a sell for a target of 4090, stop loss of 4290. A structural breakdown has been seen on the stock. We first broke the supports of 4300 with good volumes. That happened on Thursday, Friday last week. The weakness has been further cemented with this morning's gap down opening. The second one is on ONGC for a target of 290, stop loss of 330. Large volume blocks have broken this stock also around the support levels of 315. With a favorable risk is to reward, the stock can go down to 285 to 290 levels.
Okay, all right, Manish, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's the view coming in on the technicals. We take a break. Up on the other side, we'll get you more on the markets. Connect with Daniel Morris of BNP Paribas Asset Management as global markets. Do take a deep dive.
markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Welcome back. The Nifty is still holding below that 24,000 mark, closer to 23,970. Reliance is at the low point of trade as we move towards the European opening. Where do we go from here would be the big question. But all of that will also be impacted by what macroeconomic data is currently underway in the world. More than that, the currency impact as well. So we have who better than Lata to tell us exactly what's taking place in the yield space around the world, the macroeconomics of it all, and the currency impact. Before we go across to the expert, we have our in-house expert with us, Lata.
Well, though the headlines may say, lowest in 2 years for bond yields, lowest in 26 months, I think, and lowest rupee ever record, we must know that it is a very small move. The story in emerging markets and in India is a question of not reacting so much to the turmoil that we have seen in the US markets, in the global or in the developed markets. Just look at the dollar index. It's fallen from 104 on Thursday, before all the data came, to about 102.97. That's a very big index fall, over 1% in terms of the dollar move itself, such a large currency. But look at Asia. The yen and the ringgit are up 2.2%. I mean, because the dollar has fallen, they are up versus the dollar. The Chinese renminbi and the Filipino peso are up 0.2%. The rupee and the baht have fallen, but fallen how much? 0.1%. So although it may look like a record fall for the rupee, it's not fallen much. To be fair, we understand from dealers that the Reserve Bank may have come and sold dollars. But in any case, it's not a volatile fall like you're seeing in the US equity or the global equity markets and even the Indian equity markets. The point is the kind of fall that we have seen in the global markets is led by the US fall, the US equity fall and the US tech fall. So it need not necessarily be a big macro fall for Asia. And again, coming to the bond yields as well, the bond yields fell by 20 basis points in the US. And if you compare it from July 1st, the US yields have fallen by some 80 bips. They were 4.5%, the 10-year yield in the first week of July. And now they are standing at 3.7. So it's, like an 80 bips fall. But what is the Indian bond yield fall? It was 7%, 7.01 in the first week of July. And now it is 6.84, all of 16 basis points. So we must accept that this is not disturbing Indian macros just yet. But it is just yet. Already there is a whisper in the street that the Reserve Bank may have to change its stance as early as the upcoming Thursday policy. It's saying a withdrawal of accommodation at a time when, the Fed will probably supply liquidity and supply, a rate cuts, probably 50 bips, probably intermeeting, may be a bit of a, out-of-date policy, and they may, even if they don't change the stance itself in the policy statement, they may indicate some dovishness in the press conference that follows the monetary policy.
Okay, well, important RBI policy to monitor there then. Lata, thanks very much for that. We do have Daniel Morris, Chief Market Strategist, BNP Paribas Asset Management, now joining into this conversation. Daniel, I'm sure you must be working the phones, talking to your clients. But, the key question, which Chris Wood, in fact, mentioned in his report, is that there could be an intra-meet by the Fed in order to assess whether they should cut rates. Is that a possibility?
Well, certainly, but I think we want to have a little bit of perspective here. Certainly the markets have moved a lot, but number one, it tends to have been those markets that were already up significantly this year. And if you look at the year-to-date returns as of today, those numbers are actually still quite good. And you can imagine that if it had been a straight line from January 1st to this level today, without the volatility, frankly, a lot of investors would be quite satisfied with those figures. Secondarily, even if the non-farm payrolls labor market data in the US was a bit disappointing, we're really not seeing other economic indicators at all pointing to a recession. And also keep in mind that the labor market is a lagging, not a leading indicator. So we really want to be looking more, say, at PMIs to get a sense of how well the U.S. economy, at least, is doing.
Right. So what's your view on the impact that, the JPY US carry trade unwinding is happening? I mean, a lot on the street were anticipating that. Now that it is happening, would you be able to quantify the sort of impact?
Well, I think it's quite clear when you look at the Japanese equity market. And one of the worries that we've had so far this year, and one of the reasons that we've had a neutral rating on Japanese equities, was the worry about the vulnerability of the currency. And if anything, the currency had continued to weaken, even as the Bank of Japan had tightened rates, which seemed a bit surprising. We had expected the currency to strengthen sooner. Now it has in a very significant way. And then as anticipated, the impact on the equity market is quite large. And it's that uncertainty really around the currency that remains without question the fundamental issue for Japanese equities.
Okay, Mr. Morris, what's your in-house estimate of, how much more the dollar can fall?
I'm sorry, can you repeat that? That sounds a bit low.
Yeah,
what is your estimate in terms of where the dollar index could move, or how much could it correct?
Well, certainly no estimate on the degree of the change. I mean, clearly it's going to depend on primarily on the economic data. If we think broadly the strength of the dollar that we've had so far, it's been premised on a growth differential, certainly say relative to Europe and much of the rest of the world that was in the U.S. favor. Interest rate differentials with the Fed at this point being relatively late to the game if it comes to cuts in September. Those will be the key factors. I mean, really, we're going to be looking for what kind of communication we get from the Fed. For example, would there be a meeting before September? Would they envision a 50 basis point cut? That'll feed through the dollar, and that's going to be the key factor.
But would you believe that there could be sell-off of EM markets like India as well? By global funds, or do you think that may come? Can there be a growth scare in countries like India?
To be honest, for India, I think it would be less a growth scare. People have been talking about valuations for Indian equities for a very long time. Nonetheless, the market kept going up, and if anything, recently, compared to many other global markets, it still performed relatively well. But I think now that question is going to become much more pertinent to investors when they see a much less supportive global environment for risk. Markets with high valuations are going to be one of the first things that they look at.
Right, just a final question before we let you go. Typically, the order of action from central banks usually is commentary number 1, open market operations number 2, and then perhaps rate action number 3. What kind of possibility do you ascribe to a mid-Fed meeting cycle cut? I mean, are you in that camp?
At this point, no, we are anticipating a single cut in September and then another one in December. But, obviously when the facts change, sometimes you do have to change your view. But at this point, that's our expectation through the rest of the year.
Okay, all right, Daniel. Thanks very much for joining in and speaking with us. So no intra-meet rate cut expected from BNP Paribas Asset Management. They do expect the Fed to probably cut rates in September and then in December. We'll take a short break. And on the other side, we'll get you more details on the markets. But before that, we do have another macro call. We'll take a break and we'll be back with more. Stay tuned.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV 18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV 18 and CNBCTV18.com. CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV 18, weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Welcome back. Well, the mid-cap index is now showing a 4% cut as we speak. So the mid-cap index is down over 2,300 odd points. Low point of the day. There's no respite which has really taken place in terms of the advanced decline ratio. So that currently stands at around 1:15 on the National Stock Exchange. So only 147 stocks advancing to 2,287 stocks declining on the National Stock Exchange. In terms of stocks, remember that a lot of these stocks such as IFCI, which has run up around 159% this year, is seeing a cut of around 7.5%. So there's profits being taken off the table there. IRFC, which is up around 81% this year, is seeing a cut of around 6%. And from the frontline space, we've been pointing out the likes of M&M, is showing a steep cut of around 3.4%, but there are steeper cuts in stocks such as ONGC, which is down around 6%. So do watch out for that. A little bit of green seeing in the FMCG stocks. So HUL is just about holding its head above the water, along with Britannia, which is up around 0.4%, Nestle, as well as Tata Consumer. Not even pharmaceuticals in this entire defensive buying, only FMCG, which is managing to hold up. We'll take a break and be back with more. Stay tuned.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV 18. Now streaming live 24/7 on YouTube.
My wife, for instance, and she's been such a big contributor in what I've become eventually. I think some of the soft skills actually, and these are aspects, and the ability to without getting sort of stressed, being able to manage many different things. I'll just give you one example. When I was a CA, typically, and many of the advisors, the Indian Economic Service actually are women. They would be in a meeting with me maybe at 3:30, 4 or something, and they'd get these calls actually, and they would be, because they're in a meeting with me, they would be, declining those calls. If the call comes twice or thrice, I knew this was actually either their kid or their mates calling basically for what needs to be made for dinner. Yeah. And so because that's exactly what, my wife, so when I was at ISB, it's the rare occasions when she was not instructing our kids or the maid to actually say what needs to be cooked. My kids would call me up. I would be at a loss actually.
Believe in your strength, right? What is your strength? Carry that, right? It is your deep technical knowledge, your perspective, because that's where the new ideas generate, right? So keep focusing on that. That is one thing that will give you a purpose. Second thing is networking, right? Network with people whom you come across, building the network where you can share your ideas, express them, thrash them out. That is one thing which is going to be very, very helpful as you go ahead. Third thing, I will have to say that keep learning, right? Our industry is about change. It's just a lot of innovation every day. Even actually, sometimes it is impossible to catch up with everything. So keep learning. Wherever is an opportunity, learn it, right? And the last but not least, resilience, right? Don't get disheartened by a failure, right? Failures will happen. Learn from it.
One particular moment, so I actually come from a very humble background. My father lost his father when he was just 7 years old, and just completed school. I was the first person in my, clan to go to university. So when he first came to campus, and I took him to the library, the Vijay Kelkar library there. I remember him actually being very emotional and saying, at least in my next life, I get the opportunity to study in a university like this. So that moment is something which is etched in my memory. I'll be absolutely honest, I did not even know what a chief economic advisor is at that time. If somebody said I'll be X, Y, or Z, or even executive director, I don't think even I knew what the International Monetary Fund was.
Welcome back, and you've joined us for an exclusive conversation with Nidhi Khare, she's Secretary, Department of Consumer Affairs. Ms. Khare, thank you so much for joining us. And let's start with the good news first. And the monsoons have been good till time. The sowing numbers look better as well. So how are you looking at the overall ongoing sowing numbers? And of course, till when do you think that the sowing would be completed?
That we have come out of the El Nino effect, which meant, for the past 2 years, intense heat and lower rainfall, and because of which all the agricultural produce were getting impacted. We are now coming out of El Nino, and therefore we see a very good monsoon, and this is what was also predicted by IMD. With better rainfall, this year we will definitely see a very good production of not only pulses, the Kharif pulses like urad and tur. We will also see very good cultivation of onions, tomato and other such crops. So this is providing me a lot of relief because with better production, I'm sure consumers are going to not only have better availability but also at a better affordability.
You mentioned pulses, and that clearly has been in red zone for quite some time, most of the last 1 year as well. With the current sowing one and the kind of imports, various duty cuts that you have given in, would you say that you are in a comfortable position as we head into festivals?
As you would know that we have made the imports under the free regime only to make sure that because there was a production fall this year in chana, the prices were rising. So basically we wanted to make sure that if pulses are available in any corner of the world, they can make their way to India, and so that the consumers also get it, their access can be improved. This would also make the prices stable. And as we can see that because of now good monsoons and because of good sowing of kharif pulses, now things are looking better, and we already see at least a 10% discount, downward trend in the wholesale prices of all the pulses. Chana is still stable at a very high price, and therefore we had improved the availability of yellow peas. I think yellow peas will also support and sustain for the gap that we have in chana. The prices are expected to be now showing a downward trend in the retail markets also, and including chana also. We keep monitoring the prices from all the 550 centers across the country, and we are keeping a very tight vigil on the prices that are faring.
Ms. Khare, your ministry and the Ministry of External Affairs has been talking to Mozambique because there has been an issue on pulses imports from there. What is the situation like right now?
There were disturbances in the in the supply of pulses from Mozambique and also other Eastern African countries like Malawi, Sudan and so on. However, because both the Ministry of External Affairs and Ministry of Consumer Affairs were working on it, we have made our request to the Mozambique government very clear, and we are trying to get seamless dispatches of pulses. These 1400 containers which are arriving in India very, very soon, and there are other 400 containers which are also on the way. I think these, with the new harvest which is coming in both Malawi and Mozambique, we will be getting seamless dispatch from there. I think both the countries are in agreement about uninterrupted flow of supplies, especially in view of the festival seasons which are coming up. We have already, we are working at different levels, and I think the mood is very positive and very, very cooperative.
Sure. There is also high inflation that we've seen in the recent few days in perishable commodities, whether it has been greens, tomatoes, onion, potatoes. We do know that the government has had to intervene in case of tomatoes, but would you say the situation is better now, as you mentioned?
I think in the intense summer that we saw, the green vegetables, the prices went up. But now with the monsoon all over, I think the green vegetables prices have also come down. Potato is, it is stable. In fact, in all the three commodities, potatoes, onion and tomato, it is stable. In tomato, we had to make a small intervention in a few places where the prices had breached 100 rupees. And so both in Delhi and Mumbai, we started through NCCF retail sale of tomato at 60 rupees, and then it was further down marked to 50 rupees. And this also resulted in cooling of prices in the retail market. Now the prices are very, very comfortable. So I see no problems in prices of vegetables, including potato, onion and tomato.
That is good to know, Ms. Khare. And a final question to you then, and this is on the issue of spices being contaminated. And we've seen various reports, international and Indian, talking about this. We do understand that you're working on FSAI with this, but do you think that that is yet another issue that has been sorted?
This issue, because it's a food item, it is basically FSSAI, which is a regulator for taking action. And when we came to know about it, we had flagged this issue with FSSAI, and FSSAI, as you know, has taken action, a very strong action against the the people who were perpetrators. We have to keep a constant vigil on the quality of food items which are being made access to the consumers, and I think we will continue to do that work.
Ms. Khare, as always, thank you so much for joining us here at CNBC TV 18 with all those updates and in the sense on what the government really seems to be doing in sense of food prices and, of course, in sense of availability and affordability there. But with that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead.
I came here in 1991. 1991, that was my first year of college. I came here for inter-IIT. So I remember this campus especially because this is one thing that I think especially the women need to hear. So I was, good in table tennis, but I became the captain because my captain dropped out. And I came here and we were playing and I won the first game. And then all the men started booing me.
Are you serious?
Yeah. And so I realized the power of mind, right? Like, I was better than the player that I played against, but I lost. And I think that was my first lesson that I learned, which is that, you might be better, but sometimes, your circumstances make you believe you're not, and therefore you lose. So I think that's one thing that everybody needs to do, and I think coming back to this campus...
We have to correct that. We have to give it a big round of applause now to make up for what happened in the past.
Yeah, but my coach also gave me gajar ka halwa, so it was okay.
Today, she is the director for the mission that actually saw India's first private rocket being launched. So tell us a little bit more about that, Saranya, and what, you did that all under 30?
They gave me an opportunity to be the vehicle director for the mission. So it was a huge learning for me to build. We started off the company by at least when I went in, I didn't know anything about the rocket building. So to building a vehicle which can actually fly, it was amazing.
Not just actually fly, it's actually flown.
Yeah.
So congratulations to you and to the entire team at Agnikul. I know for many of the students here in the room, you're a role model, but you talked about Naveen being the initial role model for you when you got started. But let me end by asking you, who do you look up to today? Which are the companies that you respect and admire? And, is there anyone in specific that you would like to emulate in your style of working?
The one individual that I have... I wouldn't say seen in very close quarters, but seen from some distance as part of my work in CI, but I truly admire is Mr. Uday Kotak. I think he has built a franchise in a bank that is truly outstanding. And to do it in one generation and the quality of talent and the kind of ownership that talent takes is remarkable.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. The CNBC TV 18 coverage of the Union Budget starts right now.
Hello and welcome to CNBC TV 18. Rising concerns over a possible US recession, a possible mid-meet Fed rate cut and the Japan carry trade all combine to spook the equity, currency, bond and commodity markets.
Despite a ferocious 20 basis points fall in the US yields, India's 10-year bond yields are down only 5 basis points to 3.84, even as the CNBC TV 18 Citizen MPC sees no change in rates or the stance from the Reserve Bank of India.
Britannia clocks healthy volume growth and sees a good pickup in rural consumption, modern trade and e-commerce, with rising commodity prices hurt margins. FMCG stocks gain on expectations of higher consumption.
SBI Chairman Dinesh Khara remains upbeat on growth and credit quality even as deposit growth slows down, but analysts fret over crimping margins and rising stress going forward.
Warren Buffett's Berkshire Hathaway likely sold almost half its stake in Apple for over $84 billion, boosting its cash pile to $277 billion. This is being read as a strong signal of frothy valuations. Hello and welcome to Business Lunch. I'm Sonia Shenoy and with me is Hormuz Fatakia. Not a good day for the markets at all. In fact, global markets, after a very long time, are seeing the first real signs of a correction. Now, whether this will extend itself or not, only time will tell. But for now, there is no respite in the market. We are at the lowest point of trade. But the important point to remember here is this, that for the last 1 to 1.5 years, we haven't got any major correction or pullback in the market. It was just a matter of time that this had to come. Of course, we have the genesis of this fall is the global market sell-off that we've seen. Signs of rising recession in the US, the weak jobs data, the Japanese market is under pressure. But remember that in the last 10-15 years, if you've mapped it, the Nifty has always given a compounded growth of about 12-13%. And hence, this is perhaps a pullback in an otherwise longer bull market. But time will tell. For now, some views coming in. Treasuries are surging as traders are betting on an emergency Fed rate cut. So there's lots. It's an evolving story. But for now, we're dealing with the fall in this market.
The flash is also showing in the bit of a recovery in the futures of the Nasdaq as well, because at one point the futures were down over 1,000 points. Now they recovered to about 800 points as we speak. So there is some bit of hope that the Fed will have an emergency meet. All of it is just speculation. There's nothing official just yet. But the index now down below, well below the 24,000 mark, 3% down on the Nifty, trading well below the lows of the budget day. But the sectoral indices are seeing some really deep gashes this afternoon. The metals index is down 5.5%. The realty index is also trading with losses of over 5%, as is the PSU bank index. And of course, the Nifty small cap index, which is also trading with losses of over 5%. And all of these high flying stocks, be it the PSUs, the railways, the defense names, all of them are seeing some bit of selling pressure in today's trading session. And it is showing up on the screen as well. 23,950 on the Nifty so far. The Nifty Bank is now below the 50,000 mark. So that is also one of the underperformers. All the global facing names are seeing a bit of selling pressure. But the top Nifty loser today is Tata Motors, 7% lower now. And ONGC is the other one reporting results today. Another 6.5% down on that stock as well. We'll continue our focus with the markets now. And the markets as we speak have seen a sharp sell-off following weak global cues. And Mangalam is now joining in to take us through these market moves. Mangalam.
It's a trifecta of problems, Hormaz. It's US recession fears, mixed earnings in both US and India. We forget that, Intel was down 26% on account of earnings miss. And also India, so far, the earnings that have come in has resulted in a near 1% EPS cut for this year itself in terms of expectations. And thirdly, our hefty valuation. So there was a clamor for correction in the market. This was just one of those triggers. Global sell-off. Nasdaq is in correction zone. This morning we saw a cut in Nikkei, Kospi, and also the EU futures are suggesting a weak opening. Thereafter, the only thing that rises when everything else falls are, the correlation between asset classes, and we have alternate assets, including crypto, which has seen a sharp sell-off. Nifty down nearly 750 points, the Sensex down 2,400 points. The mid-cap index has seen a worse fall. In fact, over the last couple of sessions, even when the Nifty was up to 25,000 levels, the mid-cap index was actually weak, and the broader market, sentiment tells you that over 2,200 stocks declining for just about 150, which are in the green. And as we speak, there are over 450 BSE stocks which are in lower circuit versus 250 in upper circuit, and there is no Group A or Group B stock in upper circuit as well. So that's telling you about the weakness in the market. India VIX has seen the highest intraday spike ever since 2015, August 2015. So that's another thing we have to keep an eye out on. What are the nature of stocks which are falling? They have to be global facing, commodity facing, or perhaps stocks which have seen a big run up. So you have Tata Motors, ONGC, Infosys, Hindalco, all of them lower. Then the ones which have seen a big run off, the likes of NCC, GMR Airports, even LIC Housing Finance on the back of poor numbers. And then some of these defense and rail names are also seeing a big sell-off. What are the stocks which are doing well? We have HUL, Tata Consumer, Marico, Dabur, typically the stocks which are seeing flight to safety with improving outlook in terms of rural demand. FMCG stocks are the only ones bucking the trend and have seen mild green performance, though they too are off the highs. The most important things to track from now would be commentary from the Fed. Typically, central bankers follow three-step processes. One is commentary. If that doesn't work, then it's open market operations, and if that doesn't work, then you have the action, which is the rate action. So we'll have to keep an eye out on commentary first. And secondly, on Thursday itself, we have the RBI policy outcome. Do they make a change to their stance and take note of what's taking place in the global markets is something that we'll watch out for crucially. But right now, under a trifecta of problems, we've seen a sharp sell-off.
Okay, a sharp sell-off. Following the steep fall in US bond yields on Friday, Indian bond yields too have fallen to fresh 26-month lows of 3.84%. The rupee too has hedged down to fresh all-time lows of 83.84 in the intraday trading today versus the dollar. Lata is here with an editor's take. Lata, over to you.
Well, I'm going to speak about the markets that didn't fall much, or the dog that didn't bark. Most of the EM yields in currencies are actually a picture of stability, and it's a very minor fall. Some of them have even risen. Just for context, the dollar index has fallen from 104.5 on Thursday to about 102.7. So that's almost 2 units that it has fallen, which would work out to about 2%. But because the dollar has fallen, counter currencies actually rise because it's always measured against the dollar. The yen and the ringgit are up 2.2%. The Chinese yuan or the renminbi and the Filipino peso are up 0.2%. Yes, the rupee and the baht have fallen, but just by 0.1%. For the record, it may be all-time low, but it's really a minor fall. And there is, of course, an expectation or a suspicion that the Reserve Bank may have even supplied dollars. That's what dealers tell us. Now, you should not expect that because they are selling somewhere, they buy in India as well, because traders globally have lost money. So there is no question of coming and buying. But extra selling of Indian bonds or emerging market bonds and currencies may not happen unless the US slowdown threatens to become a global growth scare, which at the moment it is being seen as a US-centric and a US tech-centric fall. Now, Indian bonds, just to complete the story, have fallen by about 5 basis points. And if you look at it from July 1st, then the fall is about 16 basis. They were 7%, and now it is 6.84 for the 10-year, whereas the US yields were 4.5%. The 10-year, as of July 1st or July 1st week, and now they are at 3.7, an 80 basis point fall. So in India, there is a murmur in the bond markets that if there is an overall growth scare because of the US crunch and jobs data, then the Reserve Bank will have to think. So in our own Citizens MPC, we did notice that all members voted for no rate action by the RBI on Thursday. But when it came to the stance, there was a bit of a dissonance. Although the majority still said no stance change, there were 2 people out of 5 voting for a stance change. And the market has enough number of people voting for a stance change. Maybe you want to get a piece of the action that happened in the Citizens MPC of CNBC TV 18?
I think the MPC will continue to hold the rates.
Okay. Sajid?
Hold.
Hold. Samiran?
It's a hold.
Sonal?
A pause.
Okay. Dr. Sen?
Hold.
Okay, that's a unanimous vote. Now let's come to the stance where I have heard some different arguments. Will the MPC change its withdrawal of accommodation stance in this policy? Shaumyo?
I think the stance will also remain same, withdrawal of accommodation.
Okay. Sajid?
I believe for now they will retain the stance.
Okay.
Withdrawal of accommodation.
Okay. Samiran?
Retain the withdrawal of accommodation stance.
Sonal?
They should change, but they will likely retain.
Okay.
Yes.
Should. So I'm taking you as neutral. Dr. Sen?
I agree completely. They should change, but they are likely to retain.
Okay, so I will take it as two neutral votes, and who knows, that might be the surprise in this policy. Very quickly, a third question. When do you see the first rate cut? Shaumyo?
Maybe, possibly the first rate cut could come in December 2024.
Sajid?
The October to December quarter.
Okay, so
given global developments.
Could be as early as October then. Samiran?
We are calling for April 2024.
Oh, okay. Unchanged you remain. Sonal?
October.
October. That's I think two people are getting it a little forward. Dr. Sen? Okay.
December or early next year.
Interesting views coming in there from the Citizens MPC. But one of the other factors that has spooked the global markets is that has been the yen carry trade, which has been in focus over the last few sessions, as the yen has appreciated sharply after the Bank of Japan raised interest rates and reduced bond purchases. Now, this has caused investors to unwind their positions. Now, how is all of this affecting the global markets? Prashant is here to explain all of that. Prashant.
Hormuz, whenever markets sell off, and we've not had big market sell-offs for a long time now, but I remember over the last 15 odd years, whenever markets used to sell off, people used to go to the yen, unwind of the yen carry trade immediately. Is that happening? So I always resisted the temptation to do that, to blame it on the unwind of this carry trade. But the fact is that we've actually seen an astounding move on the yen. Let me just begin by telling you what is the yen carry trade. It is essentially borrowing cheaply in yen because interest rates in Japan have been near zero for 25 years, and then investing it higher yielding assets, be it stocks, futures, bonds, currencies, anything around the world. Anything which gives you more than 0.5%. You assume currency risk, of course, and then you invest it and you make returns. This is anecdotal, but a lot of Japanese retail money has come via that route because, I mean, the difference exists into India as well. So that is the yen carry trade. Why are we talking about whether it is unwinding is because the yen has gone from 162 early July to 142. I mean, basically, it has rallied, 10% plus 12% in the last 1 month. A currency has rallied that much, and not some piddly sort of frontier market. This is Japan we're talking about, and that's the move we've seen. What has also happened is that government bond yields in Japan have gone up and yields in other markets have come down. So the spread, the differential between the government bond yields in Japan and other places also came down. And it reduced the attractiveness of trying to buy other assets using cheaper yen. What has triggered this, of course, is that the Bank of Japan started hiking interest rates. We saw 2 hikes, and the assumption was that Bank of Japan is the start of a hiking cycle at a time when the rest of the world is actually thinking about when will rate cuts come. So Japan was going one way, the rest of the world was going the other way. And that has triggered this massive move in the currency. So think about it. I mean, if you borrowed cheaply in yen and if you've invested elsewhere, and the currency moves, I mean, USD JPY has moved 20 yen in the last 1 month. You are essentially looking at massive mark-to-market hits, and that basically forces one to unwind positions willingly or otherwise. And that is essentially what supposedly is happening around the world. There's no way to really confirm this. I mean, I've tried many times in the past also to get a sense of what is the size of this carry trade globally. but you get all kinds of numbers, but presumably it's in the hundreds of billions of dollars because markets themselves have become so big. And of course, they're so interlinked now. So that is essentially the fear what is happening right now. What will stop this? The Bank of Japan itself, I mean, its hiking campaign is, according to me, dead in water. I mean, they cannot hike anymore. Perhaps we should be looking at intervention in financial markets. So will the yen stabilize? I think that will give some comfort going forward. Back to you.
Okay, thanks a lot for that. Well, you can also read this entire explainer on carry trade, etc. on our website. So do go on to cnbctv18.com for all the latest news and information, including this story that you just heard from Prashant. But let's take a short break. When we return, we'll get you more news and updates on the other side. Stay tuned. Budget headquarters.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Back with us here on Business Lunch and moving to some news from the aviation space, marking 18 years of flying and spreading its wings across India. Indigo celebrates its anniversary with a flurry of new business updates. Danish is joining in now with more details. Danish, what is the latest announcements made by Indigo?
Well, Indigo has announced its foray into business class services as the airline has introduced Indigo Stretch, which is basically a business class product, which will be initially introduced in domestic flights. So from mid-November, there will be at least 12 aircraft, which will be featuring 12 of these seats, and this will also offer customers an ample leg room. And as far as the configuration of the seats is concerned, it will be in a 2-2-2 format. And besides this, the cities that Indigo will fly using these business class seats will be initially connecting all metro cities. So from flights between Delhi to Mumbai, Delhi to Chennai, Delhi to Kolkata, Delhi to Bengaluru are the first few routes where Indigo will fly. And the pre-booking of this will begin from 6th of August. And the initial tickets have been priced from rupees 18,018 rupees. Another thing that Indigo today launched was its loyalty program. So Indigo has launched the Blue Chip loyalty program, and in this loyalty program, every passenger can earn for every flight that they're flying in, and it will also depend on the type of route and also the time of the flight when a passenger is flying. Besides this, Indigo has also given us a glimpse of how the future will look like, as the airline is all set to receive A321 XLR from next year onwards. Similarly, the airline will also be inducting a wide-body aircraft 2027. So we have it from Indigo. They are, moving on from a low-cost carrier image to offer different and a unique airline in India.
Okay, thanks a lot for that. So Indigo moving away from its earlier business model and now looking at business class products. Well, that's going to be interesting. And a lot of analysts do believe that that will help them with their rise in profitability as well. Let's take a short break on that note. On the other side of the break, the market continues to sulk. So when we come back, we'll try and get you more news updates.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year, with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV 18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV 18 and CNBCTV18.com. CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV 18, weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions. On the go.
Grow on the go with CNBC TV.
Welcome back. You're watching Business Lunch on CNBC TV 18. Well, it's finally the end for Go First, as we understand from sources that lenders have now voted in favor of liquidating the airline. Ritu Singh has been tracking that story for us from the word go. So she joins in now with more details on that. Ritu, over to you.
It's the end of the road for Go First, with the committee of creditors voting unanimously to liquidate the airline after finding no viable offers. We understand from sources that Go First lenders voted to liquidate the airline after the Singh Pitti consortium withdrew their bid, and Sharjah-based Sky One's offer also fell short of their expectations. Remember, we've been reporting that both the suitors had offered very little cash upfront and had hinged their offers largely on the proceeds from this arbitration case against Pratt & Whitney. Now, banking sources we spoke to said it made no sense to keep pumping in money to keep the airline alive when the aircraft were already deregistered, there were no good offers, and that liquidation was the best move forward. Instead, the lenders are now going to focus their efforts to pursue the case against Pratt & Whitney at the Singapore Court of Arbitration, where they have claimed more than $1 billion in compensation. So if they do win that case, it offers them much better prospects of recovery. Remember, Go First had filed for voluntary bankruptcy in May last year, blaming Pratt & Whitney for supplying faulty engines which contributed to their financial issues. The key lenders to Go First include Central Bank of India and Bank of Baroda, with IDBI Bank also having a small exposure. Now, once all of the legal formalities are completed, the liquidation process will start, bringing Go First's nearly 2-decade-long run to an end.
Ritu, thanks a lot for that. But that is a wrap on this edition of Business Lunch. We leave you with a minor recovery on the Nifty. That's what it is, a minor one. From Sonia, me and the team that put this show together, thank you so much for watching. Midcap Radar up next.
Streaming live 24/7 on YouTube.
My wife, for instance, and she's been such a big contributor in what I've become eventually. I think some of the soft skills actually, and these are aspects, and the ability to without getting sort of stressed, being able to manage many different things. I'll just give you one example. When I was a CA, typically, and many of the advisors, the Indian Economic Service actually are women. They would be in a meeting with me maybe at 3:30, 4 or something, and they'd get these calls actually, and they would be, because they're in a meeting with me, they would be, declining those calls. If the call comes twice or thrice, I knew this was actually either their kid or their mates calling basically for what needs to be made for dinner. Yeah. And so because that's exactly what, my wife, so when I was at ISB, it's the rare occasions when she was not instructing our kids or the maid to actually say what needs to be cooked. My kids would call me up. I would be at a loss actually.
Believe in your strength, right? What is your strength? Carry that, right? It is your deep technical knowledge, your perspective, because that's where the new ideas generate, right? So keep focusing on that. That is one thing that will give you a purpose. Second thing is networking, right? Network with people whom you come across, building the network where you can share your ideas, express them, thrash them out. That is one thing which is going to be very, very helpful as you go ahead. Third thing, I will have to say that keep learning, right? Our industry is about change. It's just a lot of innovation every day. Even actually, sometimes it is impossible to catch up with everything. So keep learning. Wherever is an opportunity, learn it, right? And the last but not least, resilience, right? Don't get disheartened by a failure, right? Failures will happen. Learn from it.
One particular moment, so I actually come from a very humble background. My father lost his father when he was just 7 years old, and just completed school. I was the first person in my, clan to go to university. So when he first came to campus and I took him to the library, the Vijay Kelkar library there. I remember him actually being very emotional and saying, at least in my next life, I get the opportunity to study in a university like this. So that moment is something which is etched in my memory. I'll be absolutely honest, I did not even know what a chief economic advisor is at that time. If somebody said I'll be...
Good afternoon, welcome to Midcap Radar. I'm Sonal Bhutra. With me as always is Vivek Iyer. A wee bit of recovery is what we are seeing. The US futures have recovered. Dow futures are now less than 600 points. But yes, of course, it's a big cut that we are seeing in the markets today. Something that we'll discuss through the course of the show. Hey Vivek.
That's right. A red-looking screen, not a pretty sight, especially given the fact that it's the broader end of the market, that's the mid-cap and the small-cap space, seeing quite a bit of a sharper cut compared to the benchmark indices. But quite a lot lined up on the show. Let's start off with the top headlines. Rising concerns over a possible US recession, a possible mid-meet Fed rate cut, and Japan carry trade all combined to spook the equity, currency, bond, and commodity markets.
All sectoral indices in the red, metals, auto, PSU, banks, realty among biggest losers. Mid-caps fall nearly 4%. The advanced decline ratio indicates one stock in the green for every 14 in the negative.
Nuclear software corrects nearly 15%. The company says its revenue declined 7% sequentially, while EBITDA margin and profit after tax also come under pressure.
Okay, those are the top headlines. While we've been talking about the market fall ad nauseum since morning, let's just look at some data. We've been talking about how valuations have been very punchy across the markets. And if we see the valuations across major indices and major market capitalization, for Nifty small cap, it's around 22 times right now, which compares with 15.8 times that we've seen on an average. For Nifty mid caps, it is around 33 times, which compares with an average PE of around 21.57 times that we've seen. So some of them are trading at 50 to 53% of their average valuations right now. Large caps, of course, the gap is not so much. Large caps are trading at 20.88 times. The average P is around 18 times. So that's why that bigger fall on mid caps that we are seeing right now. And the other data that I wanted to look at is the drawdowns that we've seen in times of major corrections or minor corrections as well. So the average drawdowns have been around 15% for large caps, 18% for mid caps, and 19.5% for small caps. This is between May 2010 to May 2024. But in case there are very bad drawdowns, something that we see during periods come by, like COVID, for instance, that's when large caps have fallen the least. Large cap drawdown has been 50.8%, which compares with mid caps at 54% and small caps at 58.6%. So in a market like this, we usually see that mid caps and small caps fall more than large